Yeah, Turbulent Tuesday. Hello. I need to get my mouse. I've been not using my mouse and it's giving my fingers a workout. Hey, you can hear me all right? Always need to check. Come on, you can do it. Hey, what's up? You can start, I don't mind. I'm trying to get my mouse. It's all tangled up. I had this cool mouse that had this like retractable cord thing, and then it doesn't want to work, does it? It's just a plug and play thing. It works really well most of the time. For some reason, it's not working at all right now. But the retractable part of the cord, I was about to say, just kind of broke. Yeah, I don't know. It's just not working. Probably could figure out how to turn it back on. All right. Well, here's my thought on today's price action. I think, and I'm not a huge fan of this kind of movement at all, period, ever. So like, if you guys are like, what are you talking about? Yesterday you were all happy because we had this sort of a cliffhanger yesterday, right? And we already knew that this had happened before where you had this push up with a high amount of volume and then it sold back down. One could look at this and suggest that this is some kind of a short covering exercise and then they're opening up new put positions and so on and so forth. And they're doing this by distributing back up here. And then 1, 2, 3 times we've kind of like been pushing up. You got to have this kind of overall understanding of certain things in the market. And one of those certain things is the nature of maybe like a head and shoulder, okay? So the head and shoulder is probably one of the most like overused and yet misunderstood patterns. And the more you read about it, the more you find that there's a reason that some of those indicators that you get, the like auto indicators, there's a reason why sometimes they get confused or they seem to appear to have a bias, when it comes to head and shoulders. And the only thing I'll say about this, and I don't want to cause any kind of like immediate concern, but the only thing I'll say about this for now is that technically a head and shoulder, the bottom of the head and shoulder does not have to be flat or straight by any means. Like it doesn't have to have this kind of perfect charting pattern head and shoulder. Sometimes it does and it's nice and easy, and sometimes it doesn't. Sometimes it's a bit of a rise, sometimes it's a bit of a drop. What really matters to me and what I think about primarily when I think about head and shoulders, just from my own observations in the last few years, but even maybe beyond that, doing all the reading I've done and stuff, this right here technically could be classified as a potential head and shoulder, because what's happening is that it tried to break the resistance at 462, there's all kinds of other fun stuff going on here, which we can't ignore. So I'm not going to ignore that, but I want to give you guys this kind of really brief little blurb here. So you're coming back to a place around 460s that has had a significant meaning for this range, and the significance is that this has been the most dominant support in the range. You might think it's 4, you might think it's 430, but it's not. When we did the PNF, it was really easy to see the point and figure chart that 460 actually has the most bottoms of any bottom that we have. Now, could that have maybe changed? We definitely added one at 430 right here, and we added one down at 415, 417 down here. It may have changed a little bit, but on the whole, 460 acted as support for the majority of this range. If you go back and you look at the average support area, it's been 460s. So up until about September 24th, when we've kind of pushed below. So you can see why this feels very heavy, like weighted, significant maybe, because we keep approaching 460 and we're not breaking it. And so what was really strange about the price action this morning for me wasn't necessarily the drop. I mean, the drop was ugly, not going to lie. Not a big fan of the drop. I don't particularly like that we're getting like this heavy volume influx, but we're not really moving very far. If we're going to play catch up, like I said yesterday, really need to see this move out today. But what's strange to me about this whole thing, beyond that, is that the volume kind of like evaporated after that first big push and the second big push, I would say. Like you could see that there's a continuous kind of downward trajectory on this volume. I don't agree. I would not necessarily agree that it's all in the top, although a majority of it does seem to be here. I mean, if you're just kind of being biased, you might say, oh, it's not all in the top, Booksy. It's really, right here in this first push-up, the highest volume actually starts on the break of 435. Then it starts diminishing consistently. And I would agree, like that's true. So what we're kind of seeing is this rising, almost like a rising wedge, where you're getting kind of a narrowing volume as you're trying to push back above, again, that resistance that's really been historically important at 460s. And maybe not surprisingly, it's given us some trouble, as you might imagine it would, because there's an issue that bears have here, right? It's twofold. So number one, regardless of whether this ends up becoming bearish or bullish, right? Bears don't want to go over 460 because not only is that on the big picture building a support here between 450 and 460, not only is that building a support if you hold it, not distribute, and that's key. Not only is that building a support above the major creek, right? But then pushing above 460 also signifies a recapturing of the dominant support in this range. And I don't think, I've said this before, I don't think you're going to see very much resistance from about 460 up till maybe the 550s because, and I don't want to get too complicated about this like nature of waveform patterns, but this waveform is definitely built out accurately to get you back to the top. And we've talked about these structures quite frequently on this channel, about the nature of these structures. And I'm going to do my best to kind of try to simplify it a little bit for you, because I think it gets a little bit complex sometimes, and I don't want it to be that way. The nature of the structure really is built on these two lines right here, and then the top and the bottom. So let me see if I can, maybe I'll just, I don't want to erase the chart, but I always do that, and then I end up like regretting it. So let's see. We're going to use 415 as our bottom. And that means we're not going to use 5 here. We're going to use 9, even though technically that's where the drop is. I should probably just use 502. Never mind. Take it back. And then we're going to use 417. Anyways, so point being, this dominant structure, okay, is built around a wave here that goes up and it fails to advance here in July and August. That's where we had that big push and then we failed. And ultimately, this is where the hook finally happens. We know that because the wave structure tops, bottoms, tops. So anytime you see something like that where you're seeing, and it's hard to see, this was one of the hardest areas that I've ever seen do this, but you get the top, bottom, top here, and then it finally breaks down. And so let me just do it. I'll forget it. I'll forget this. I don't want to completely erase everything, but I feel like it's going to be to our benefit to just clear the chart for a minute, because I think it helps to visualize it and see it better. Because I know the importance of 460 is obvious for a lot of people. I get it, but I just want to like remind myself the overall structure here and what the implications are to that. So this structure has, gonna have to do something else. Hang on. Because I don't want to have to repeat these markers if I can avoid it. Let's lock that. I don't know if you lock it if it ends up not showing on the other side. It may not matter. Yeah, this is irritating. I don't know why my mouse is not working. It's really frustrating. It's a lot faster to do this with a mouse than a little trackpad. So if you're wondering why it's taking me forever. All right. I should be able to see it visually though, right? There we go. Okay. So this is the overall picture that we're looking at, right? We've got two markers anchored on the same point, and then we're going to have this as a range that's built out for a wave. And we're going to redefine, not going to take very long. We're going to do it pretty quick here. Why didn't you do this before you got on stream, Booksy? I didn't want to. I don't like, sometimes I like really chart a lot when I'm not doing stuff, and then other times I'm like, I do not want to chart right now. And that's how it is. Or I'm doing something completely different, and I need to focus on that. So someone asked me about GME. They said it went to 28. Yeah, and then I said it'd probably come back to 25.50. So far, so good. So like the move here was implied to go all the way up perhaps by the 18th to 28 something and then come back down, and I picked 25 as the main support. Is it taking a moment? Yeah, it may be just a breather though, and then it could still go one more time and push a little higher. I would not say it's necessarily over and like, oh, it's over, now it's just going to chill out for, a month or whatever. No, it's just pushed up. It's made the advance. I think it pushed like the overall kind of creek, but it didn't ultimately come up high enough, in my opinion. So I think this is just a breather, but I think we're starting to see that 25 area marked off. So you can see the high back here of like on the 9th. That high was 25.02. And you can see when we pulled back here, we pulled back to a low of 24.95. So that 25 area is in contention right now as a potential for support. It makes sense. It's been used before. The marker's already been here. I had suggested that this would be the area because they're going to use, in my opinion, they're going to use that as an anchor later. This is way off in the future. No, that's not correct. If you need to contact me directly, and then I will send you a link to the Discord. So if you did not contact me directly, then you probably didn't get the right information. Okay? All right. I don't want to spend too much time on this, so I'm going to give you my name. And you gotta like message me, and then I will send you a link, and then you have to join the link. That's all there is to it. You just gotta message me on the Discord, and I'll give you an invite. I need to know that you're a person and you can do that. And you can let me know that who you are from YouTube or whatever, okay? So here, this push-up, I don't necessarily think it's over is what I'm trying to say. I think that you may just find some ground and then push up again. There's a slew of other targets. I mean, it could be that I'm a little off and maybe it was supposed to be a little lower. The intersection is so darn close to where we came that it's hard to argue that it would need to go any higher. But when I look to the left, I don't think this has been tested all the way up to like the 29s, back down to 28.35. We kind of landed shallow, so we just did not get quite as far as I would like to see us go. So I want to see another big push right here. It's a wedge breakout too. So, I mean, if you want to do like a wedge target, you can, but it's probably going to be pretty similar. It's going to be like a 68% retracement essentially on this big move, which is probably right around here. So anyways, so I don't think GME, there's not much to say right now. I think it's just in a pullback for a moment. I would be surprised if it stopped here and just kept crashing back down, but there is a open door for a pullback to come back down and retest the breakout zone at 2350. We kind of just left and took off. And on the daily, there's no major check there. So that was another one that I put on the marker. Like, I think it could come back all the way to here. You know, when we drew this out, we hadn't broken out yet. We were right here at like 2330. And I said, maybe we need to test again, even though technically we've already done it, and that ended up being the case, right? Maybe we need to test 2270 again. Maybe we need to test 2125, but then we should start an advancement. We didn't do either. We had already checked it, so we just kind of left. So I was kind of anticipating, like, maybe there's another check. There wasn't another check. It just took off, and then I thought you'd probably have to back up right here. I don't think that really happened. So once we got to the advancement of this, we didn't come back down to 2380. The idea was that you could go all the way here in one or two moves and kind of sweep up and then chop back down. If they're checked on the way up, they may not be as major. Does that make sense? I'm not looking at anything like narrow here. I'm just looking at big picture daily analysis. So there might be some stuff in intraday here that looks a little bit more bearish, but I'm saying this as like a possibly just a backup, okay? A simple like retracement that's going to rebound, all right? So on AMC, I'm looking at this on the weekly, and I really want this weekly to close high. There's always a chance that there's some kind of a max pain type deal this week at like 450. But I got to be honest with you, when we were talking about this weekly, it looks really good. When we were talking about this last time, we had talked about this as a key point of interest, like, hey, it looks like it's coming up, like it's going to try to breach the wall here, and you can see it was maybe going to have a cross up on the moving average. It did cross up. So if it can stay high here, stay elevated, stay above 450 this week, it's still bullish. It may not feel bullish to a lot of people, but frankly, like that to me looks like a candle that's closing above. The only thing that would be bad is if we drop below 450 in the creek and we end up down here at like 440 or something. I couldn't put a lot of bull spin on that, not easily, okay? So back to what we were doing a minute ago without my mouse. I'm really kind of irritated that this mouse is not working right now. Because usually I just plug it in. Ah, there we go. What the heck? Third time's the charm, I guess. Hooray! I'm so happy. It doesn't move so much faster now because that was like painful. Right? So like if you're distilling this down to kind of bare bones, this is the way that I would do it. All right? I would take this and I would say that I would define it as a waveform. This is like a sign of weakness over here back right around earnings in August. Okay? Because it pushed below that marker, and then this is when it finally doesn't hold the marker. So if you're only going to pick maybe 2 points here to go off of, You could use the beginning dip down low, or you could use the dip down on maybe the 26th. I think either one could be very valid. When I did this, what was it? It was, sometimes this one's not really accurate because technically this is like the selling climax, and then it like rebounded and this is the support. And when I did it I remember going back and looking at November of 2021, and it actually works a lot better with the lows. So this probably is even better. And it may be that this little guy, even here, could be used. This is like a buy-in moment back in, I guess it was June 3rd, or like that Friday. Either one. Which is it? I don't know. There's a lot. There's a lot. It's easy to find the breakdown because it's like the last major support. It's either this or this. It's not really very complicated. And this is not like again, this isn't meant to be like overly complex either, but you have to just kind of take into consideration that depending on the way that you illustrate this, it does change the trajectory a bit. We may even want to do a couple of them. So the point is that you have a support here. It was hit, it was broken, and then eventually it broke down. There's a number of ways to kind of illustrate the same thing, all right? But you get the idea. Direction here is self-evident. It's up, and that's the way you were going. So again, could we use like anchors here to pick different ones and kind of favor like a slightly higher, slightly lower, that kind of stuff? Maybe a little bit. I don't think there's more than really one target or two targets here at the top, so that makes it pretty easy. Now, which is it? You would think by now that I would have this down to a T, but sometimes I do this and it's like, oh, it's the top one. But sometimes I do it and I'm like, no, it was the bottom. And I think the better way to maybe approach it is just to say that it's some kind of a series of supports. There may not be like a one size fits all. So it could be that maybe the best way to look at this is like as a series of trend lines, parallels, if you will. Why are you going all theoretical today, Booksy? So yeah, that looks like it's correct. So I think what we're going to do is I'm going to take this and just duplicate it. And yeah, that looks pretty good right up on that marker. It makes sense to me, I guess, because I'm thinking about how when you're getting to the end here, you're basically trying to come back up. Like all these up thrusts are coming back to check all these different supports and different things. Ultimately, what matters the most is like where is it distributing horizontally. But yeah, I think there's an implication that you're trying to walk down through this mark here. The reason, you'll see why I'm doing this in a second. You guys are like completely lost. You're like, why are you doing this? You shouldn't be rebuilding your chart every 2 minutes. I'm not rebuilding it every 2 minutes. But what I'm doing is I'm trying to identify the most likely middle. Now that one looks pretty good. That one looks pretty good. So that means that the center here is like 498. That makes sense because when you look at this with the VRVP on, that's the center. How did you know that, Booksy? Because I keep up with stuff like this. I catalog it in the back of my brain because you need to know where those levels are. So like I knew that was going to be right because we've talked about how it used to be 485 and it actually went up. It went from 485 all the way to like 495. And I figured with how much time we spent at 5, they probably rose it even more. You might say, well, just say 5, dude. Well, I'll say 5 when it's 5. But right now, that's definitely where the liquid center is. So this whole thing is like a big wraparound, right? So as a result, we have a pretty good idea of where this waveform broke down, right? Comes up, down, comes across here, and then it ultimately breaks and comes low. That's just one part of the wave. The bigger wave here is actually a bit simpler, which is good for us, which is this, essentially. Okay, That's essentially it. And you may even say like that if you want to not include like the extremes. Another way to look at this, if you want, is you can think about these double tops, these M shapes. Think about those M shapes, and then think of if you see something like that on the bottom. And that should give you an idea. It looks like a W on the bottom, but you get what I'm saying. Those are creek jumps is what they are. So this is us exiting this rise here. And then this is us exiting this drop here. Makes sense? So this is us changing direction on the top. This is us changing direction on the bottom. So now you have like a pretty straightforward wave. So what I'm going to do is use the sine wave tool. And I'm going to be careful with this, but what I want to do is kind of, because it's going to look ugly if I do it wrong. It's probably going to look ugly anyways. What I'm going to try to do is get like an average of the move. So I think this rounds out really nicely. You can see it kind of widening. I think that's going to be our top. And then I'm going to use this as like a tangent so it doesn't actually pass through it. And then this is where things get a little bit dicey, but it's just symmetry, that's all. So I'm going to use that as an anchor for the middle. And so that marker doesn't go all the way to the bottom, it actually goes like right here. And then this gives us a really simple visual, and actually that worked really well. You can see visually the prominence of these coming back up, testing. So is this a good marker? I think it's an adequate one. I think it works pretty well. You can see the kind of congestion in the middle, and then on the opposite side, we're now seeing it kind of come up and retest here and here. It's like it's trying to get a footing back above it. It hasn't got quite back above it yet. So naturally, like if this were to go up, you know, and make a higher high and then find a support, now you're above the wave, right? And you could continue. So the next thing we want to do is actually time out this wave. Notice I'm not using the bottom here. I'm just using the move as it started from the support. And what we should find, if it did work correctly, and it's pretty close, albeit this one actually comes off the bottom. Yeah, it's pretty close. So I'm using the bottom here. I could use like the middle, I guess. Maybe it's a little more accurate. I don't know. It doesn't really make a huge difference. Let's just do that. So this should be going up through here to the top, which is the opposite. It's just a way of loosely constructing a sine wave so that we can visually see better maybe what's going on. Yeah, so this is where I wanted to kind of leave it for this part, because why do all that? Because what I want to see is if they're trying to volley you back up, is this angle adequate and the timing adequate to kind of get you back to the top? Now, based on this timing, you're kind of like, well, that's a bummer, because that looks like we'd only come up to like 560s by December. That's not nearly high enough, right? That's true. When we see you guys like, what? When we see these waveforms, like, they're not going to be perfect like that anyways. And the idea is, again, just to get kind of a generalized sense of direction. If it breaks out, there's other things going on here, right? We've talked about this quite a bit on the macro. Like, this is a major resistance all the way down. Breaking that leads kind of like a melt up moment, you know? So it's, even though this looks very like sheepish, I don't want you to look at it like, oh, it's some kind of perfect example of how the timing is going to be. It could get there very quickly and then chill out and then advance again. And it may be that it doesn't go again until, you know, later on in December or whatever. When I did this a long time ago, and I did it for this area I did do this, but it was a really wonky S-curve. Because back then I was using some kind of I guess I was doing something a little different, where I was trying to generate like to figure out where that middle was. I was using like different methods, and I was using this as the wave. So I was using a wave that was going up here, which doesn't make any sense. Like, why would I do that? I don't know, but it worked. I got the target within a couple bucks. It was really simple. It was also kind of a given if it were to come back up where it would sort of distribute. So there's other ways you could have done it. But basically I was using like this wave, which is kind of strange. It doesn't really make a lot of sense to use that wave, but I did. Okay. So looking back at it now, you know, is there a similar kind of a move, if you will, in terms of an S curve, you know, that advances through here? Probably. But I wouldn't have done it this way back then. And again, the things that I'm looking for when I was doing this comparison the first time are a little different than maybe what I'm looking for now. So like what we're doing right now is we're using the breakdown, that node where it breaks. That would kind of like be us doing this low here, maybe, which is pretty darn low. And that's a really low angle. It's complicated, right? Versus the higher angle here, which is pretty different. And that would require us to use, and that's a real trajectory. It's definitely a part of maybe a fib fan you could use, but that would require us to use the bottom instead of this region, right? So that's a completely different line on this chart on the right here. It's like higher up. It's like this guy. So you can see like there's a kind of an inconsistency, one or the other. This might be a better one for us to use, though, if it gives us a better result for maybe where that wave hits the top. We could try it out and see. Pretty close. Yeah, I mean, it's pretty close to like right in the middle there. This would have been March 2nd. So maybe, again, more than one way to do the same thing. We're kind of looking at a very gentle iteration versus something a lot steeper. So let's try that one too. Because I don't want to ignore that if it's possible that that's the right, like the better estimation. Like it's a steeper wave, so you're going to get a faster result. And my guess is it probably goes, I can't get that to lock on, it probably goes higher quicker. We're dancing around 450 right now. We're only up about 0.5% on the day. We've had a lot of shenanigans this morning. There's some things about this that don't bother me. There's other things that definitely feel like it's a UTAD. The high volume here really was bugging me. The high volatility is really bugging me. I don't like that. The lack of push over 460s is kind of bothering me as well. And that's kind of where we started the stream today, was the importance of 460 for this whole range is very, very significant. It's like it's kind of an area between like a 10 cent or 5 cent area between like maybe 458 and maybe 60 something, 62, 63. But if I had to pick one, I'd probably say like 462. So the lack of push over here, the repeated up thrust into that they're not catching. And specifically like this morning, I think this one really bugged me a lot, this push-up, this first push-up. I know I'm zooming in all of a sudden, but I just want to kind of like recap this for folks that maybe weren't here 20 minutes ago. This first push-up this morning, it's kind of a strange beast. It doesn't look great because the volume pushes up, evaporates, and it does stay pretty high during this selling period. And I'm pretty sure, like, again, somebody like Stockfather who is expecting this to distribute is going to be looking at this saying, well, it looks like it's just distributing above the top here. It's come back up to 460s to sell off again. So they already got a lot of selling, and then they pushed it back up to kind of come back up and sell again when they gap fill. What was necessary here was that it holds and that it pushes back above 468. If that doesn't happen, 462 up to 460 or 480s and then hold. If that doesn't happen, you're not really in a position of strength, are you? So like that's the bare bones for today. So we're kind of watching, waiting, seeing if there's any kind of a secondary action here. I said this on the Discord group. The one takeaway that I would suggest is important if you don't want to like have to deal with the idea of an upthrust or whatever, is that this is making higher highs and higher lows. Like technically, when this pushed out, you know, when it pulled back this morning, it didn't go lower than the previous low. It was like a few pennies off. And when this ultimately took off, it's probably like a trend right there. When this took off to the top, it made two higher highs. So like in theory, could this be like a wave cross beginning that, you know, comes back down and then breaks out again and then rockets up? Maybe. But the other problem is that you have to look at the bigger picture, and you know, this kind of may demand that it doesn't go very far until tomorrow, but the bigger picture still shows that this has come up 3 times to this top, right? And that's almost like a head and shoulder in some ways, because you've pushed higher in the middle and then the second 2 stayed right at 461, which isn't good. You want to go above that, all right? So there's a maybe in there, but I don't want to focus on that maybe right now. I just want to keep going back to this big picture. So that's what we talked about first thing this morning when I jumped on this morning. It was this afternoon. I didn't get on until noon, so you didn't miss it. Now what we're going to do is focus on the wave here, because we want to know if this even makes sense. If there's a clear and definite, yeah, that's really good right there. That looks really solid here. So there's sort of a competing wave, I would suggest, that goes pretty high. So that's the wave that I was the most concerned about when we came down. Now we did create other, shall we say, breakdown supports. I don't know what you want to call it. When we were laddering down here and just kind of doing the step ladder down, we created these levels. Each one of those could be thought of as like a fan. So if you were to prop a fib fan up here, we can do it just to show you what the tool looks like if you've never used it before. You can use a GAN or you could use a fib fan. Speed resistance fans are fun. They're a little tricky. You gotta kind of use your better judgment on like where to place the angle for it. Like, so this is one, for example, that looks pretty darn good. You can see the walk downs are very, very like straightforward, right? And so if I use this as the middle one, for example, that looks pretty good. Right here, there's a lot of continuity there. 1, 2, and then 3. Why does it do that? I don't really know. This self-fulfilling prophecy stuff, or if it's some kind of a, I don't know, baked into some kind of algorithm, doesn't really matter. Point is that it typically works pretty well. So then what we're seeing here on these creeks that we identified earlier, specifically this one, this is actually like a, let's see, that would be 618. No, I don't know if I have them all on here. Hold on. Because that should be the 0.5. No, that's the 382. That's the 0.5. That's the 0.5. So if this were like a Fibonacci or a GAN fan, you'd have these white, and then a one on the outside. That'd be more prominent, like right there. And interestingly, that one goes all the way back to the beginning, because we talked about this one before. So this one is a long-term fan marker. If you take this guy and extend it the other way, this was like established like back here, as were a couple others. So that's kind of interesting. Anyways, so those would be like the more significant ones. So we can just mark those off. We're not really doing anything like super profound here. We're just kind of marking off the really the outer 618s and then the 0.5s. And we can get rid of that fib fan. Reduce some of the clutter here. You could have just deleted them on the fan tool. Yeah, I know. But I want it to look this way, so I'm going to do it this way. right? So each of these would be a level that you may have to then, work through as you go along. This doesn't really give you as much confidence maybe about where that S-curve is, though. It's like none of these really seem to give you the best, like where is it? I don't know. It's a good question. They're not really like super, super clear. What may be better on the whole, and I guess this is the only way to do this, is to look, if this doesn't make another lower low, what we can do is look and see from the top to bottom. Should I use Think Booksy? Gotta think about what you're doing. Yeah, see, that ends up being like right in the middle, so I don't know. That doesn't really work. So this is the high on the rebound, and it comes up. This is the secondary structure of the cat ear. So if I were doing this on another chart, and I saw this, and I thought this could be a potential spring. How would I measure the middle 50%? Would it be like that? Yeah, that's usually how I would do it. So it would be the top of that ear down. That's the waveform down. So the projection would go from... there's a reason I did that. If you guys are like, what is he doing? If you've not been on for a while, you may not know what I'm doing. But basically, I'm trying to identify where that triangulation is. Because what should happen, and it works really well if it's angled right, is that you end up triangulating here where the SOS is, because the wave, this would be like where the wave broke, and then it's going to come back there later. This is the same thing that happened on the Supermat, like the big picture on AMC and on GME. Like historic GME chart has this massive distribution early on. The top of the cat ears signify where it goes to later when it pushes up after it hits a spring, because the wave completes. And it boils down to a little bit more of a simplistic kind of understanding of wave movement. If you reduce it to the minimal parts, you can get just the basic information like that. That's your wave right there. So it gives you everything you need. These are good because they mark off, these points right here are good because they mark off direction that is failing. This is the original trend that's failing. And that's the direction bulls are trying to go before they capitulate and go back down. So if it's going to advance, that is what we would want to find. So, man, it's tricky. So I think this one is so ugly, I might have to use... You guys are like, what are you doing? That's a big hike in volatility there. I might have to use a higher time frame, and B, probably need to look at RSI to help me. Yeah, it looks like a flag right now on RSI. See that? It's flagging down. To that support. That's a good sign. It's just chopping right there, working itself out. Because this could be a creek jump, but then the issue with this is that there's also a rising one that goes from really low. This one's like hard to read. Because this goes from really, really low to up here. So I would put it there. Like this is the direction that they're trying to go. From this point through this point here. Okay, So I think we were right. I'm just having to double check. It was kind of a roundabout way of double checking, but I think we were right that it's this marker here, because that's the only one that goes through all three, and it definitely works best on the RSI. You can tell very clearly, at least I can, that looks like the support. This is the breakthrough, rejection, rejection. So the wave should be coming back up here. Funny enough, this kind of almost goes all the way back to the beginning. All right. Well, these other ones are good to know, but they're not going to matter today for what we're doing. So we'll keep them on these two lower ones on the chart, but I'm just going to keep them there just to have them there. But I'm not going to use them for the next thing. Yeah, so that's pretty steep. Pretty steep. So the question then is, where does that wave go? Because this would have to be, if this is a spring, this would have to just be the breakout above the spring, above the creek. We get that. That's the importance of that wave. I am kind of redoing my chart, but I'm trying to get something specific out of it. So I think the best way to measure this will be, there's two points that we want to kind of work off of. One is kind of where we are now, but I want to take this back up. So this is going to be a little bit truncated. So this goes back to the intersection, which is actually higher. That's at 510. So it's not the liquid center like the other one was. The other one was the liquid center, and it goes pretty low. It only goes up to about here. So I'll leave that on the chart so we have that locked in. It's basically like an intersection over here in December. This one is a little different. So that's one. So that would be the halfway cross. And then let's do it again. Actually, it looks pretty good. It's almost right where it needs to be. It's like right here at 489 on August 12th, which is the day the iterations stopped. So I had done this before, and I remember thinking this was the middle, right around the 9th and the 12th. There's the 9th is a Friday, and the 12th is... So that I still think that's the middle. Like, I'm finding that to be the middle of the overall... Yeah, the overall structure, which is kind of weird. The down move, I mean, ended up being across that middle, timing-wise, or pretty close to it. But this wave is a little different, because this wave implies that you don't actually get there. That's not the middle. The middle's back here on this drop down on the first. Eek. Which is it, Booksy? You don't know what you're doing, do you? No, I know what I'm doing. I just... Because there's so much garbledy-gook in the middle here, it's hard to like identify the points that I want to identify. I'm trying not to be like really biased about the move, so I'm trying to identify them. And I'm ignoring like the major upthrust, which is another thing. Like, we could be using that, but I don't know how to use it just yet. So I think that might be like the bigger wave up. We had talked about this. There's a marker from here to where the gap is, and that actually intersects that same little time pocket. So that's definitely like the center mark on the wave. I'm getting the same results each time, which is a good thing. It's not a big window. So the gap starts at 292. So we're going to lock this one out. I'm going to make it a different color so I remember what that is. It's too dark. Can't see it. Yep. So that's interesting. Because see how it's like right there? It crosses that major creek body right around August 6th. So I think this whole area is kind of the transition zone, and that makes sense. There's that massive drop down, which is the bottom of the wave here. So it would make sense, I guess, that could be like the middle. That's where I have it drawn out here, and that's usually the way we see it. It doesn't always work that perfectly because this is kind of a little bit biased, but the way I drew it, that's the most typical way you see it. All right. Well, the whole reason I would do that is because I'm trying to confirm that this indeed strikes through the middle. And ultimately, like, this is the way that it happened in 2020. So in 2020, there was a wave back up to meet. I mean, it's exactly like this in 2020. So if you took this line at 20, it says 20.07. I may not be able to get that exactly, but I can get pretty close to it. If you took that marker, 20.07, this is where we had previously talked about. Ooh, I got it. Nice. We had previously talked about how it ultimately didn't break out when we thought it could break out right here. And so there's a lot going on right now. You guys are like, I don't know what you're doing. I'm all over the place, man. I'm all over the place. There's so many middles. But at least the very minimum of this, at the very bare minimum, you could say that we've got a pretty decent idea of where the middle is up here. So in this little area around the previous earnings. Maybe that makes sense because they're sandwiching it between two earnings. That may make sense. They have like a simplified quarterly system. So that's kind of like the low, the trough, if you will. So let's just go with that for now. Let's just put it right on earnings on the 2nd. And then we'll ignore this one for the time being. That actually looks pretty dang accurate between the two. Yeah. So then my question is, how accurate were they in getting it down? Oh, not at all. See, it took way longer than expected. This is kind of what I was wondering before, is if this wave is actually like elongated. I'm curious. Not as much on RSI. It looks a lot closer there. Timing-wise, coming down. It's significantly more structured. So I moved to a higher time frame, and I started charting down RSI as well, because sometimes this may not make as much sense. RSI always goes sideways, so it's not impacted as much by the ups and downs of the price action. In terms of, like, when you're looking at sine waves, it can be really hard. Sine waves are way easier when they're just going left to right, not all up and down. We're still sitting at 452, so unless something big changes, I won't be flipping back to like a tiny time frame. So that looks pretty solid. I mean, it is possible that what they're trying to achieve, I mean, it's not impossible. That's what I'm trying to say. It's possible that what they may be trying to achieve is something over here, where the low is in January, but I already thought that, so that doesn't really, you guys are like, what? What do you mean? Well, they come back down in January. So I had thought that they would bounce here, go up high. This is exactly what I have on my other chart. They'd go up high in December, and then you get a distribution, and then you come back down hard going into January. This is exactly what I was imagining. So I'm not particularly surprised that this might lead to a low RSI point early January. What I really want to know is that high on the price action. It's probably going to end up being the same thing we already have, like 860s or whatever, but I still want to see it visually. Because yeah, in theory, like right now, you're looking at it and you're like, well, it doesn't look like it would have to go above like 650, you know? But we're not really trying to identify that as a termination point. We're trying to identify it as a model of intersection. I digress. Because if you go back to, for example, like the waveform as it happened in March, it ultimately meets the top, you know, in a time where it's essentially going through a straight, this is like a full reduction, and it's jumping over, meeting it at that point, right around that 50% mark. So it spends just as much time on the top of the wave as it does on the bottom. It makes it pretty easy to predict if it does that. I don't know if that's what we're actually getting right now. So that's where I'm getting frustrated. It doesn't seem like it's doing it. Like there's no clear singular point, except for maybe that December 6th area, which is a big bummer. If it chops here forever and then only pumps up to 570, I'd be pretty annoyed. It's not that that doesn't necessarily make sense. It's just that it doesn't necessarily make a lot of sense. That was kind of like the low ball target. Now this is interesting because the interception here, or intersection, not interception, this isn't American football. The intersection here is right on earnings, which is kind of fascinating. So it creates a point of interest, and this did break upward like it was going to try to go, and it didn't go. We've seen that before, where it's acted like as a pivot point for something significant happening, but then nothing happens. So then let's do a 50% move here, and let's see where that is. There. And that's pretty interesting. Again, Fibonacci fans. If I were fanning downward, that would have been one I probably would have used. I'm guessing it's like maybe the 236 or 382 off the center, if that's the center. Okay, what about just the 50-50 here? That might be the best way we can do this, because if this is indeed going to go to an SS, it has to come above 595 anyways. Now 620 had come up quite a bit, and I'm seeing it again here. So the intersection, interesting, it doesn't come high enough. Do y'all remember what was the high it went in after hours? Didn't it go up pretty high in like extended hours right there? I wonder. I wonder if they're just not including us in that move. They're not including all the information because some of it was in that extended hours trading time, which is becoming more and more relevant as time goes on. See, this is a little different. This looks a lot different. It actually makes more sense of that hit on 520s back here in August. It does change the trajectory of these markings. Oh boy. I tend to think that extended hours and regular trading hours both work. There's people that say that you should only use one or you should only use the other. Stockfather and I have gone back and forth on this when I talk to him, because his argument in what Wyckoff teaches, that you should not use extended trading hours because the market is not wholly participating. So I've heard other people say that that's dumb, because there's sometimes a lot of the market's participating, a lot of your institutional players are participating in those after hours sessions. I don't think there's necessarily like a wrong answer. So it's just kind of a matter of opinion on whether you think that they should or should not be used. This extended hours gives you a very different picture of this price action moving that you just don't get in the other. Specifically with how high it came up really far. And then these pullbacks look pretty good. They don't look like they're completely broken on extended trading hours. They look a little bit better. Yeah, that's interesting. And then also interesting to note is this doesn't change. This looks the same. They held it. They didn't move it off the gap. They even gapped it. It looks like there's even a gap in extended trading hours, which is kind of crazy. So they did not fudge it here. It's still the exact same number. Closed at 294. Yeah, I think it's the same marker. So that remains significantly like the same. It might be like slightly higher, but I think that's really interesting that that's basically the same number. Like it didn't change. Because it could have. I mean, it could have been very different when you open up extended hours, but this marker remained the same. So this is still like super significant. Where the gap up begins and the bottom, 28.24. That's not going to work. So what are we doing here, Buxy? Just stretching our brain cells and putzing around? Well, until the price action makes some more defined bottom here and definitely decides it's going to go somewhere, there's not really much we need to worry about in intraday, because the price action right now looks a lot like a head and shoulder in some ways to me. In other ways, I don't really know that you would define it that way, but it's struggling. It needs to get back above 460. I said the same thing yesterday, 450, then 460. You got to get above it. You can't like putz around and not make that move. So, but what's interesting is this wave that we're kind of working on changes quite a bit when you go to extended trading. So I'm going to use extended trading for a little bit and see what that yields. Maybe it yields something similar, but the danger maybe of doing it in extended trading is that we're getting an extended trading target, which means like it could potentially like not go there in regular trading hours, you know? It's like then it's not as reliable for our purposes to like give us an accurate top or bottom. I think you could argue that. So this went up to a high of 690. So I'm just going to push that up to 690. I'm probably going to end up having to fix that again anyways. And then once again, like timing is really everything here. So yeah, I'm going to end up having to move it again anyways. So the outermost wave is right there. I have it red, but I'll make it I'll make it yellow because it's like the other one. And that is not the one that we've been looking at mostly. We know the one we're looking at mostly is pretty significantly. We're kind of sitting on it right now. It looks like a head and shoulder to me. I'm a little nervous about it. The other wave is actually over here. And then we want to anchor this like on the middle. We think the middle may be here. So that's actually really far back. That's not going to work. What if we use the middle structure, not of the cattier because that obviously doesn't work. That gives you the downside. It gives you like kind of where it terminates down. It does not give you the upside. What if we use this middle instead? That's interesting. This is not the first time this number's come up when I've done this. There's a little LSPY that happened back here, and there was a moment where I thought that 613, it was like 613 or something like that, was like the center of this range, and it had to do with the drop down value. It's a little complex, but it had to do with the drop down value of the top drop when we did the reverse split. Okay, well, if it doesn't produce a good result, I'm not going to keep going on it. But the suggestion would be that if this breaks out to the upside, this could be an upper target if that ends up being like the 50% on that wave. That's a hard one to swallow because I think that that's pretty close to, yeah, it's pretty close to like where that top is up here. Like that would be logical that could be like a distributive spot for us up at $10. It's like $9.99 or something. It's a little lower than that. It's like 970s. It's more in line with what we saw with the 8s. And it does remind me of when we were back here, that 980 was a really key pivotal distribution zone. We plunged beneath it, worked our way down beneath it after that original run up to like 11. And then it sat as a support. It was kind of the last support we had before we started going down from the top. So maybe it's like 987, since that's a little more on the nose. It's like right there. Up to 1077. I've kind of been looking at this as if that's going to be the distribution zone anyways, all the way up to about 1388. So it does make sense then that this is kind of like right on the button there. I mean, it's pretty exact. So what are you saying, Booksy? All right, so I've done this like 3 different ways. So the lowest target yielded was real low. It was down here at like 571. That was the lowest for sure. The next one was oddly like too soon. It was back here on November 6th, and it was at $6. So there was a suggested wave there that was built in. It's just timing and math. Like it didn't go there, but that's where it was. And that one also didn't go because it was too early. We know that didn't happen. So that wasn't like, it ends up being a point of pivoting. We have this massive flush around, but it's also right on earnings. So that kind of implied that maybe if it had run up into earnings, it could have run up there. That probably is something that I've said before too. I'm sure I said that at one point, like, oh, this could run up into earnings and this is what it would look like. There's a pretty clear trend here with extended hours on that seems really important to me. I've probably used this before. If we go to other charts, I've got parallels that go up. Here, I'll go over here. I've got parallels that go up from these previous regions. I've used it before. I know I have multiple times, but because we're using extended hours, I'm going to include it again since it's something a little different. Yeah. So this seems to me to be the place that we lost the trend. Like there was a low trend that could have been caught, low as in a rising trend here that could have been caught to the upside, and we broke down beneath it right there. Coincides with that breakdown that we had after the FOMC meeting back in September. We dropped low, and I'm willing to bet that probably matters where we are now to some degree. Doesn't look too perfect, but it's kind of like on the bottom there. Oh, that's where we gapped up to, isn't it? Yeah, probably. Can't see it very easily here, but I bet when we gapped up, it's right where it was. So that's an interesting intersection as well. Yeah, that works. The thing is like a lot of this stuff is built into the minutia. It's like there's an element of like these things already exist and they're already traveling along these markers. Maybe they're built by fib levels, maybe not. Rejections here, and then that's where it builds the last support. That candle opened at 324, which is right where this marker goes through. And then it looks to me like that could be the bottom. These were worked out on the way down. It's pretty close. It's not perfect. It's pretty close though. All right, whatever. We'll keep them on the chart. Mostly I'm concerned about this channel right here. This to me is very significant. This right here. This indicates, again, a directional change. And you can see it visibly pretty clearly in that movement here. Yeah, this direction is probably the most important one. Remember, if you're trying to turn around, there's always going to be an uptrend being built out. So that also places significance on this center mark as a potential for trajectory upward movement as well. Since we don't have anything coming before us to give us like a low, if we had like a low down here on this wave, we'd have ability to like kind of pinpoint where exactly that cross section is on the 50-50. We don't have that. So instead, we're just going to use these parallels. Yeah, these are like the same ones that we find like every time. Pretty much exactly right. Yeah. Whatever. All right. You guys are like, that's not whatever, Booksy. It looks important. I mean, it's kind of important. It's kind of not. Because we've done this before, and every time I do it, yeah, this little guy in the middle, it's like almost inconsequential. It doesn't look like it's very important. It's this little breakdown at like 520. Which I guess is important because it ends up being where we get stuck forever. It ends up being pretty significant long term right here. But the rest of these may not be as significant until later on. So yeah, on the path back up, you would have to make some kind of a passage through here. And it just looks like we kind of missed the boat is what it looks like to me. And then you'd head up to the top or to the next one. So wait a minute. Let me mark off that red marker again. All right. We're just getting more and more complicated. You guys are like, the word you're looking for is convoluted, Booksy. Yeah, maybe. All right, where's the timing? Dude, you got to stop deleting stuff. So the timing between these waves is actually pretty close to what we're thinking. This goes to the end of November. So this is, again, a little bit redundant. It's not encouraging to me that we're not making any headway. This should be exploding right now if we're going to make this second move. I don't think it's going to go beyond this. I don't have any. This is the latest middle that I've been able to find. and I'm kind of stretching to get it. And I know that sounds weird because you're like, well, you shouldn't do that. But it really is like the longest wave that you can draw here is this tall one that comes down and back up. There's no other one. So it would be the most long-winded of them. And originally I thought it was going to break here and go up in 50-50 or work its way up like that. Kind of in a similar way to what we're doing now, or that way we would expect it to do now if it ran, but instead it went down. We've talked about this so much on this channel that you guys are probably sick of it, but you know how like we talk about the M as like it's either going to be a S curve where you get like an M cross in the middle and then an S curves, or it's going to not jump the creek, right? And then you're going to go low. And in both cases, it could be the same exact theoretical creek, right? But one of them doesn't jump, one of them does, that kind of thing. The waves themselves, it's just a way of describing it. We're not really saying anything like particularly profound. You're really just saying one is continuing breaking resistance, the other is not. There's nothing, again, particularly profound about that. But what it matters is that this is an easy to identify setup. Sometimes this can even have like a head fake where it goes up and then back down, so on and so forth. But you can kind of branch everything off of these two basic structures. So it's just a simple way to understand it. But here's the thing. Every time we see these, the assumption is that if you've done this, that you're going to continue to go down indefinitely. But that's not actually true, because a wave down could be a move into like a spring-like motion that then reverses back above that trend, right? And you could go down later. This is what happened in 2020's setup after it went to the top. I know I'm repeating myself. If you've been around for the last month, we've talked about it quite a bit, but remember the market, including small cap market, the market in 2020 going into like, I want to say like August or whatever it was, September, that broke out. It did the wave up as if it were an S curve. AMC, when it got to that moment, it did not. It went a little higher and then it dropped below. It ends up going into a long-term sell-off to come back down to the floor, and it gets a spring motion. So this is essentially like the comparison between what happened in the S&P 500 and small caps versus what happened in AMC. And what happened in AMC is that it basically just went back down, and it does this massive slingshot, right, to come back up and reach to this target that it had kind of left behind. Whereas the market on the whole had already kind of gone there. It had been going towards that target all along. So it looks like a completely different setup, but really one is just going down for liquidity for a spring, whereas the other didn't need it. So one looks like a V-shaped recovery. The other just looks like some kind of crazy slingshot, like somebody's pulling back a bow and arrow and letting it go. That's the overall picture that I want us to kind of keep in our brain, because as we do this right now, it's a similar thing. We did not cross. It's very, very important. The small cap stocks on September 13th, they did cross. Like, they went up and over. They did this. AMC did not. All it did was go back down low. So it's very significant in that when you look back at what happened on the 13th, which is back here, we're talking about, it's not apples and oranges, right? We're talking about like the same thing as what happened in 2020, essentially, to a degree, all right? We're basically talking about the same thing. Like, this is the cross-up moment. I know it's hard to see on this chart. I've got a lot going on. There's a lot of noise on this one. But right here on the 13th of September, or was that here? Darn, man, it's doing that thing again. I don't know what's going on with that. It's this weird, like, snapping thing. I don't know what it is. I don't know why it activates, because I'm not hitting any buttons. So it jumped the creek right there on the 13th for that FOMC meeting. This is where things really deviate. So again, you take it down to like bare bones minimum. that's the point that I'm most interested in, because at this moment, AMC, if you're going to draw it on the same chart, AMC does not cross, and it goes down for like its spring, quote unquote, assuming that it is a spring. And then it takes a really long time, right, to get there. I can't even draw it on this chart because it's such a ridiculous comparison at this point, because it's like, well, is it ever going to go? You got to remember, the 2020 run-up happened in like a very relatively short amount of time compared to the time frame that it had gone on. It gone on 10 months, and then that whole move takes place over the course of like 22 days. So like 22 days compared to 10 months is a very small percentage of that actual time, right? It's less than a tenth of that percentage. So you have to kind of consider that the overall timing here may not look like it favors a big run up all of a sudden, but that's exactly the way that AMC has in the past generated those moves. It's like it waits forever, and then all of a sudden it just goes, and it takes like no time at all. It kind of plays catch up, right? So currently the small caps are already pushing, like they're above not all-time highs, but are they above all-time highs? No, I don't think so. Not quite. I think they're like right at the top. Let me look back. Hang on. Let me not say that before I double check, because it's been a minute. So they're kind of pushing it. They're getting close to all-time highs again. This is actually, again, very similar. If you look back at where we were when AMC took off on the small caps. So this is the motion that I was talking about. So here's IWM walking over the creek. Again, it's a September date, which is kind of fun, but that doesn't really matter. The point is that it's walking over that creek, and then come November, December, which is where the big breakout happens because of maybe elections or whatever. You have this big move up November. It just keeps going. It rallies all the way through January. By about the 28th, it's essentially nearing the top. And then it looks like February 11th, it's all the way up there. You guys probably know this already. But during this time period on AMC, very different, right, than that for AMC back in 2020. It actually went up into elections and earnings and then dumped one more time right here. So this is the same time period right here. It's way low. And I'm sure people are wailing and saying it's not fair and it's never going to run and blah, 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 blah. Like it's never going to go, right? It's just sitting there doing nothing. So on and so forth. Yeah. Ultimately, this didn't run until January. So some of you guys are like, well, that sucks. You telling me we're going to have like a January run then? I'm not saying we will or we won't, but if it does not run right now, then yeah, you might look at something like this and suggest that that could be very similar to what we're dealing with right here. If it cannot manage to make any kind of advancement, it's not going for that second top. It could just go straight down into the lows and then burst in January, finally. That's a different setup, very different than what we had talked about previously, where it goes up and then comes back down. So I think someone had asked me about that like a week ago or two ago, because we were saying like, is it more probable that you run if you don't go now, you just drop into January? Yeah. The thing is like the timing from that point forward doesn't make any sense. There's no real connection with what's going on here versus what's going on here in terms of timing. Because the problem is, by that point in 2020, we'd already hit the gap that we made on the bottom. By that point in 2020, we'd already hit the gap, and we were already kind of building out a wave down. Maybe that means something else to us now. I guess we can interpret it anyway. We could say that, well, I think it's going to go down, and maybe it doesn't. It just gets the gap and then takes off. Maybe it doesn't go to a new low. Right? It never made the secondary high. And I did make a point that was really odd, because MPW did seem to make that second high right here at the time of the 13th. It did exactly what I thought AMC was going to do, and it really ticked me off because it basically built it out the same way, and it did go up, and AMC did not. So it's a little bit confusing. However, I digress. Point being that that might be true, but that completely changes the timing of everything else. So as far as I can tell, like in terms of the wave, there's no need to go into a massive drive down right now and then break out to the upside unless you intend on just going, which again may happen, but you're like, why are you so sure it's not going to run? Maybe because the idea of all this stuff does work, but it doesn't work, like the timing doesn't work the way you would think it would if you assume, unless you assume that this is like all part of the same schematic, like from top to bottom. This isn't just a sell down. I look at this as like that high heel kind of thing, right? You kind of walk down, create these little stiletto heels, and you're breaking out, and this is really where the range starts taking shape. If that's the case, then the timing really doesn't start till like April, which is similar to what we have in 2020, March into an April dive. But the problem with that is that there's a lack of continuity from that point forward. So like when you look at the whole, this timing doesn't make any sense unless, so that you would have to use the timing from like March, which is not high. That's like up here at $5. And that just doesn't make any sense. So when I look at the wave, that's where I'm getting confused. Like the big wave, which goes like this. That wave, that was a really good guess. It's like right in the middle. That wave is like here, right? And I think that's a pretty strong wave if you use it, but it's like, that doesn't really, that suggests that you would come back up all the way to 10, and that's where you need to break out. And I 100% agree with that because it matters, because that is where the actual creek is. Like when you look at the big picture creek from up top, it goes down through like 10 way over here. It does not go, it's like right there basically. It does not go early. It doesn't go like right here. So that doesn't make any sense to me. There's no other marking that would indicate that the creek is like right about to be broken. So you guys are probably like, what is he going on about? It's like rambling like a crazy man. What I'm going on about is that it doesn't seem like there's any pressure to get to a high right now. And so it doesn't make a lot of sense to me as like that this is like a pre-January move, like that we're going to dump now and then run in January and go all the way up to the top. What if you're wrong? Well, I don't know, man. Like there's a lot of ways that you could be wrong in this situation. Like you could shift this all over. Still doesn't look like January, but you could shift it all over and say, I think it's doing this like in a more rapid fire pace, and you got the middle all wrong. And sure, man. I mean, like there's all kinds of ways like I could be wrong, but the problem is that even if it got up here, even if it comes up here and builds out going into summer of next year, it hasn't broken the creek yet. Like we could camp out right at the top and it wouldn't mean jack diddly squat. So therefore, like I would not say, oh, it's the same thing that happened, it's the same thing that happened in January. No, because January definitely jumped the creek. Like January absolutely did. And not only that, but when it did that, it broke like the macro downtrends. So there's some complication there in like maybe in that interpretation. I don't know. We could go on and on and on and on and on. What matters more is what's happening now, not what happened back then. But I think it's a good thing to note that, yeah, while we were going down into elections and earnings, and then we popped after elections and earnings, we're kind of seeing something similar now, but we're really pinned quite low, and we haven't seen any kind of secondary advancement to drive us down low, except for what we're experiencing right this very moment. And if Stockfather's right, and this ends up being like an LSPY, this is just like a head and shoulder with a double top over that creek. You could see this drive the price down potentially to, I guess, get back down to like 350 and go to new lows. And then that kind of sets you up for, I don't know. I really don't know how it could move that way very quickly. It'd have to be slow if it's going to churn into January. It would be like a really slow, painful, long-winded downtrend kind of thing. Yeah. So coming down to that gap, you would have to say that it would take, shoot, I mean, it could take till almost next earnings. So there's a lot of big question marks here if this doesn't break out now. Changes a lot of my chart. I, for one, would be pretty irritated, but I'd also have partially because I would just be wrong, you know, about the nature of this move, and also like what they maybe intended to do over the next 4 months. But also because I think that the frustrating part about it is the buy-in. There's an incredible amount of ownership, institutional ownership right now. So it's really frustrating to me to think that institutional owners we basically be screwing each other over, because if Vanguard or whoever decides to take it down, all those institutional owners are going to be forced to, like, a lot of them are going to be forced to sell, like they're going to get out. So they're basically not using the buying momentum, they're using it against the other institutions to drive the price back down and get a sell-off and bring those shorts back in before they take it up. I find that to be really annoying. So, and it's annoying because we didn't get the second top. So we never had the phase B move at all. It just failed to do it. And there was just nothing there. It's almost like it didn't exist at all, which also ticks me off, because if that's the case, then it implies that there was no need for it. There's no need for it. There's enough sellers there already. Somebody said earlier, like, nobody's selling, but that's obviously not true. If you can instigate a sell-off, if you can instigate downside this long, for this long amount of a time, maybe that shows a little bit of effort versus reward. Like, oh, it's a lot of effort over a long period of time to get down there. But it kind of signifies to me like a bad thing, because it's like there's not enough. If there's too many sellers, you don't need to bring the price high, right? You don't need to bring the price high to sell off, because that's what part of distribution is, that they take it up in order to sell back down. You take it up in order to find sellers, find people who want to get out of the play so they can drive the price and start a big sell-off. And historically, it works really well. It worked well in 2020. It would work well now. But if they don't need it, that just tells you that there's already like enough sellers. Like, they don't need it. They're going to find plenty of sellers just by breaking down. So there's a lot of confusing things here, like with this as a distribution. Yeah. So on the whole, I think that we need to look at all possibilities. So if the wave doesn't complete, we already know like that's kind of the direction it's going to go. We've talked about this before. It may not even go that far down at first. I wonder if they would take it to like 380 or something, and just to do it. Weirdly, to me, it almost looks like that could be it, because it's like, well, why even bother going lower? At that point, you've probably gotten back down to wherever your creek body is. And I guess I have to believe that they would try to make a run for the gap. So this went from like really happy talk to really sad talk really fast. But part of that's because I'm thinking about the structure of what's happening, and like we've missed a lot of windows already. So like there's not very many windows left. In the grand scheme of things, if this were to distribute, I kind of wonder if it just like really starts accelerating. Like this is already upward momentum, quite a bit of acceleration here. This is the most accelerated we've been for a long time. right there. So part of me wonders if the goal is eventually we're going to come back up pretty far. There had to be some kind of like natural target to go to. Yeah, I suppose just the top, trying to get back up to the at least the $11 area, top of the range. This is way out in December, even if it were just the SOS. This is December 12th, this is December 23rd. This little pocket region, maybe November 25th. I'm going to do something real quick. I know that we were near the golden pocket. We're probably sitting, I'm sure it's at like 461. Yeah, there it is. So with the extended hours on, the golden pocket is this area between 618 and 65. Some people will say it's the 0.5. Because the 0.5 is a very famous bouncing place, that's often considered a part of it. Some people will say it's between the 618 and the 0.5. Look it up. I don't want to argue about it. I like to favor the lower one because I tend to see that works out better. So I marked it off as like the golden pocket. We're chilling out right now inside of it. So like if you're looking at the retracement value here, you would suggest that it's right here. It's very clean, for lack of a better word. It's between 438 and 463. It's almost exactly where you would expect it to be in terms of like a golden ratio retracement. The 618, which is 347, lines up very well with the top of the previous range. It just so happens that that is also very close to that previous support that when it dipped in February. So there's certainly a reasonable expectation that it could go down. And then the 854, which is really low, is actually right at the top of the gap at 309. So there's certainly a lot there that we could talk about in terms of like direction, you know. And it would not surprise me to see that kind of 786 hit if it does come back and break down. So those are important levels. They're there. We don't need to have anything else to do with them right now. We can keep this on the chart, but it was already marked off because we were talking about 460s anyways. So if you're like, oh, that's new, you know, that's not new. We were talking about that earlier. It's the same level. At this point in what I call my trading career, because like, yeah, at this point, what I call my trading career, I don't really worry too much about fibs because they're usually right where you expect them to be. Like they end up being, oh, we're trading them right now. It's like, yeah, probably. Like, what good is it to know that? It just tells you like, all right, that's where you are. It's like telling you your coordinates, but you already know where you are. You know what I mean? It's sort of a good exercise just to make sure you're on point. So we'll say that. Yeah, anyways, I digress. So the wave here would complete up in 13s. If it were to complete this wave, meaning it goes from bottom to top, in theory, bottom could be anywhere between now and November 20th, and then you would come back to the top again. And I mean, again, in theory, like if this really retraced like the whole way down and it did do a huge, I don't know, 618 retracement or something, it could be like really low. It's not that low right now, but yeah. So I would suggest that this is probably one of the better termination points in terms of like last minute moves. And it is lining up to what we thought, which is late November. So we kind of went the roundabout way today for sure. And unfortunately, maybe we didn't get like anything more conclusive than what we already had. But it's a good thing to note when there's a moderate amount of consistency. That doesn't mean it's going to go there. That doesn't mean it has to go there. It's just a matter of principled movement. I think when you look at the bigger picture, this has to make sense. What makes sense to me is the 869. I thought that was a lot more compelling than going all the way back up to the top. But if you're just doing a triangulation of direction from like peak to where this intersects the top, it does intersect this uptrend. So there is that right around the same time. We'll just stick it where it is here. It's like on that little drop down. That's one of the parallels. That's up here at like 13s around the end of November. I don't like that one as much as the other one for a number of reasons. And I also don't know why in the heck you would want to do that right this second. Because it goes really high, and then you're really, really, really far away from the bottom. That flush would be horrendous. It's like 196. It doesn't matter when it gets there. That's really low. So if on the off chance, I suppose, that this did run up and it did hit 13s, we talked about it yesterday. I don't think it's way out of left field that that's where it would go to. This is a pretty traditional move for AMC to go away from that kind of a target and then break back up to it. That being said, it's not the most conservative. It's definitely out there in terms of targets. Like, that goes pretty high. And then the flush for that goes pretty low. Is it consistent with what we see in 2020 in terms of like where it comes back to? Maybe. The thing is like $2 didn't look that bad when you look at the big trend. If you go and you look at the major trend, like the trends coming down, they would put you lower if you go back to meet the bottom again. When you look at this as a possible, if this is like an auto reaction and then there's a phase B top, and the phase B top is higher than the auto reaction, the expectation would then be that you're coming back down to the floor. So anybody who's like, oh, that'll never happen, well, where is this range, Like, I guess what I understand from this is that this range is built out as a macro range. I don't see it how maybe, I don't know, some people don't see it that way, but I don't know how you could ignore that. It'd be hard for me to look at this and be like, yeah, that's not the bottom and that's not the top. Like, to me, it's kind of a given that the bottom is down here near 2s and 3s. So I'm confused by other people's confusion about the nature of like a floor, for example. Like, it would be right there. Like, that would be where your floor is, and then this would be where the ceiling is. It's almost the same exact, proportionally the same exact number too. So if this is like a massive range, then the expectation is that you could go back up to redistribute, but you really only need to go up to maybe 10s, and I don't think you even need to go that high. I made an argument that you don't need to go past 869, and it gives you enough ammunition to come down, because you can use the liquid center at 869. And this is what I talked about for a couple weeks. There was a lot going into that gives you enough ammunition to come down through that same marker that we just marked off here, the 5 middle. And basically from that point forward, you're driving back down through to the gap. So the reason that was so significant is because that comes into play with this concept of like why you go up to begin with, which is you can go high enough just to sell off. So if you push to like the 869 mark here, this is where I was coming from anyways, you have enough to go all the way back down and get right to the bottom of the gap, which is the only move that we haven't made that did happen in 2020. There was a push up that then drove the price back down to the gap, and then it bounces out, right? And so you could have a 50-50 whip around that middle target, which is still there at 511 or whatever, as we're defining it here. It makes perfect sense to me. Didn't make sense to a lot of people yesterday who came on the stream because they were like, why would you only go there? Why not go higher? I mean, look, there's evidence that you could go up here to this top area. We talked about the PNF. It's up here at like 15 or 16. It's high. If it makes the break, it'll go hard. But the issue with that is that, like, why? You know, why does it need to go that high? Well, the only reason you would take it that high is to drive the price ridiculously low. Or if you don't intend to come down at all, then maybe you drop first, like right now, for example. You sell off right now, you get the gap fill, and then you take off going into January. And that's a different situation, because then you could make an advancement towards that creek that's pretty sizable and chill out here and have a similar setup, but not the same setup as 2020. It'd have to be like thought of as a unique, in my opinion, it'd have to be thought of as kind of like a unique setup, because you're approaching it in a very different way. Like, you're basically walking it up. So this M ends up being like a large short-term cross here that then comes back up and then has to make more support. It's just like a macro wave. It's a bit odd. I don't know what I think about it, but I guess you could make the argument that that's what you think is going to happen. You know, it's going to come down and then rally from a low and go all the way up to like $20 or something. And then it's just like a huge waveform. So you'd have to maybe go to that gap and then confirm that this is indeed the floor. We're not going to go down and get more liquid beneath 290s or 3. So it's really just not a, it's not like a cookie cutter thing. I think a lot of folks yesterday that came on probably haven't come on in a long time. They don't know what I'm talking about, and they were not happy with me saying that it could only go, I think 2 or 3 people were like, well, if you're wrong, then you should denounce. It's like, why would I do that? You should denounce TA. It's like, I could see why you would go down now if the intention is just to sell down and get back to the lows at 290s or whatever. Maybe now is a good time to do that if you intend to run it up in January. But the problem with that is that it's not a run that necessarily that you may expect, like the ones you expected in the past. It doesn't, where it goes up and then chills out for a few months and then goes again. This could be a very long-winded range because there's a multitude of checks that would need to be made that weren't made already if you do this move without going up one more time. So it's complicated. You could end up seeing this flush pretty darn low in the future, like come back to 5s even. It doesn't have to stay high. There's no reason. And even if it did walk out, who knows? We could be in like a new era of AMC where the expectation is that you're going to have these massive run-ups. Maybe the operator doesn't want to do that, you know? Maybe they don't want to do that. Maybe they want to have like a completely new way of doing the moves. What I'll say is that when I look at the overall picture, it still makes sense to me that there should be a wave here somewhere to the upside. Like, I've never been bearish on the overall outlook. And that ultimately you're going to come back up, I think, and meet kind of meet the end around the 80s, but I don't know like why, again, outside from like comparisons to the past, why you couldn't do that in a more like methodical, slow way. So there's a bit of an issue in that we're relying a lot, I should say, on past performance to indicate maybe how we might do right now. And that could be dangerous, because it may not be the same. So we're pushing up again. We're coming up to that 460. We really want to mount that 460 and advance. I guess if I had to describe everything we just talked about in a very, very short amount of time, what I would say is that I can see a path forward going down first or up first. I'm still going to favor what I've favored before. I have a lot of other reasons that I haven't addressed to expect it to potentially come back up to the 8s and 9s and then go down again. And a lot of that has to do with other stocks and other setups, which may not fly, and a lot of people might think that's kind of a dumb thing to do because AMC is its own beast, right? Make sure you treat it its own way. I get that. I'm with you on that. Maybe it's not worth the stress either of kind of trying to make everything match together. But the problem with any kind of a chart is there's always like another answer, right? Like this could be the other answer right here, is it comes up to 530s and that's the second head and then it drops. You know, there's all kinds of issues with any charting methodology. And I think you're just kind of relying on what you feel is the most probable in these setups. So a lot of it's going to depend on whether we can get over 460. But like this wouldn't surprise me if this pushes up here and hooked here. I mean, it kind of looks right. It also might be that coincides with what happened, what we were maybe expecting, because we were saying there was a lesser wave way out here near December 6th or something. There was like a smaller wave that did not look like it was going to go. That might be what we're really dealing with here, is that maybe we are going to get another push. And it's kind of like a half measure. It doesn't go the distance. Instead, it just craps out. It just creates a hook. So you get like a lesser wave, and then it distributes. Still goes to the top of the range, but it distributes up here. You get your hook, and then you basically can just dump from there. I don't see as much of a strong case for that, but it could be that might be the part of the reason why we're spending so much darn time around 460. Maybe the design there is to build out a new platform to have that whip happen lower, because that could get you down to like 360 pretty easily. You know, just thinking out loud, that's definitely possible. If I'm trying to get down to the bottom, but I don't need to get there all at once because I've got time, this is certainly like a reasonable estimation. Has anyone else said that? I'm curious if anyone else has like heard that before. And I know that there's people that have been squawking out numbers like left and right. That's not what I'm talking about. I'm talking about, is there anybody out there who's like really, really confident that we're only going to go to like 570? I'm kind of curious. Have you heard that at all? Because I'm kind of looking at this now like maybe the goal is an offset move. So instead of taking it up to an SOS, which is what I've been kind of building my structures on, like, oh, the SOS is up here, so it's got to go above 6. Sandy Smith said, I've been hearing 560. So you've heard 560 before. All right. Well, misery loves company, I guess. It's good to know. I mean, it's good to know if there's people out there who have already done the work, who feel like that's a really good target. Because as far as a range goes, I think a lot of your big, you know, like all these funds that put out targets and stuff, most people have said between 4 and 6. They see it as the range, and I don't disagree. It's kind of a given that that's where it is. But it's like, I wonder if it only went up to here and it distributed and it was a slow, boring move, which would be really boring. I mean, it would have to be really slow moving up because it would take 2 weeks to get there, which is boring. Like, that's not a lot of movement for AMC over time. Maybe this pushes like really hard to like 520 and then it has like a really deep retracement and then it pushes one more time into end of November like it's gonna go, but instead craps out at like 570 and then it generates a hook. So it never really gives you the 6, or if it does, it only does an extended hour, and then it generates another hook right here. That actually is right where it would be. I say should be, but that's where it would be. It's the right pocket, and then this is actually the right pocket for the SOS. Right at 620 to 6. Both are on the menu here. I can see the build out going either way. See, this would make sense to me if you're trying to like control a sell-off and you just want to take it back to the top of the range. I think this is right around, yeah, the May 15th markers right here. This is when all those 13Fs were posted. And that would be like a decent, reasonable place to think that a lot of people might want to sell there if they think it's going to go down. So if they smell blood in the water and they think that, like you're an operator and you think, well, I think it's going to go down, but I'm going to wait and I'm going to sell when it hits the highs again in the range. You're waiting for them to take it back up. See, this is interesting because this actually goes, you may be just waiting for them to take it back up to the top. And we're just sitting here like thinking about all these great scenarios where it's going to run. And they may not even want to go past like 6. They may not need to if there's enough people that want to sell there. Yeah, so this is the 15th right here. All through this area. It's right on the nose. It's right at 4. It's right at 5. It's right there. 581. That's the whip around that happened on the 15th here, right around 581, which definitely helped define the top of the range for us in regular trading hours. I know it's really close to where it is in regular trading. I don't think it ever went quite above there, except for that one little peak in extended hours trading. So that's kind of your ceiling. And then where does that intersect the where does that intersect? Just curious about something. I know we're kind of going long here, but I want to see if I can find the See if there's continuity there. That's right where that one S curve we looked at earlier, that one wave finished right there. So it would make sense for a number of reasons to go back to that spot and not the greater one, because this is the main trend right here. So like it would definitely make sense that that's where you would hit. That's kind of where the rubber meets the road, as they say. Like when you break out, if you break out, you have to go above that intersection. So there's a triangulation anywhere, it's right here. And we did that earlier, like an hour ago, because I did the lower S curve, and it's right there. So there's definitely a strong possibility here that it does not even go above 581. It's possible if you have, I know that's like a really rough one. I think, and here's the other thing, I think that's very possible, because if the desire is to just get you down here to that 350, 360 floor, then it puts you in a really good place to do that. And then you have the wave from the cat ear top here. Oh man, it's pretty clean. That's pretty darn clean, guys. That's a 50% move just to get you back to that pocket. And that does not fill the gap. But then again, in 2020, when we came down, we filled the gap. So basically this hook acts like a latent second ear on this, like a bigger macro cat, because we did have a bigger ear for the front. So it's a little confusing, but basically like in the middle of the two ears, you have two ears. That's pretty normal. The idea is like you have a big push. You actually had two. You had multiple big pushes. You had one, then you had another one, and then you had like another one. And then this is the one that actually builds out like the first ear that breaks down. And then the second ear would be that for this guy, like layer 2. And then the third ear, this is kind of crazy looking. Maybe the one that comes up high and finally like breaks out. It's really bizarre because it looks like a batarang or something, but it's a little bizarre because it doesn't normally appear like that. Usually there's a lot more, something catches, like this might catch, and then it just goes into like an SOS or whatever, you know. So normally it's not that bizarre looking, but you get the same kind of motions in these wave crosses. So this is more typical because you get a jump here, and then you'll get the jump here. And this is almost what happened on GME to some degree. And then you'll get like the last jump here. And it usually coincides with like a horizontal breakout level. So you've got essentially like a really straightforward. So each one of those is a quote unquote wave that's building out. Like a macro wave is being built here. And on the big picture, you'd have something like this. It'd probably be longer than the way I did it. It'd take a lot longer. But you get the idea, right? Something like that. This is more typically what we see because at some point it needs to turn back up. You don't usually get this like constant widening on the opposite side. But it might be possible that that's what they're intending to do. Or they're just going to do it like this until the end, and then they just drop it low. That looks like a pretty traditional distribution right there. So anyways, I digress. Back to 2020. This happened as a run up from November 3rd into the 25th, and then it goes down into the 30th, which is very similar to the time frame we're looking at. So this goes till the 25th of November, which is right in this pocket, and then it drops down into December 30th. This is the 19th. I don't like being perfect one-to-one with timing, but just to give an idea, that's a very similar timing. Weirdly, what I just drew, sorry about that, motorboat in my mouth. Weirdly, what I just drew looks a lot like what we see here on the RSI. So I'm kind of curious now. I don't think it's always that symmetrical, but now I'm kind of curious what that measurement would look like, because it's starting to look that way to me, like this being the push-up. I'm very interested in to know. I wonder if this went down first. What if it's like a really latent? That would be bizarre. Still doing the same thing though, so. Okay. Check this out. Let's go back to 4 hour. Oops. And it's gone. What is this? This might be OVV or something. Did I get rid of it on accident? I did. Check this out though. So on the it's weird, man. Now I can't unsee it. It's so weird that the RSI is like already broken out, isn't it? I think that's so bizarre. Like it looks like it's already out of the trend, but it is not out of the trend on price action. Like to me, it's a matter of like the disconnect is such a unique thing. If that's the middle, then this would be wave up. This would all be part of like a wave down. This would be a wave up. And then this would be out. So in the sequence here, this would be representative of, I hate to say that because it almost looks like it'd be done then. or nearly done. Yeah, it kind of be representative of that. So that's interesting to me, because then the next move would be this push up and then the dump, which is exactly what I thought was going to happen on the waves. Because it's like, as silly as that looks, it's like that would be the next move. So I know it's a bizarre way to kind of come to a conclusion, because you're like, well, that doesn't mean it's going to happen like exactly like that. No. But it's a very interesting thought, because that's the way the waves typically do work. And when we do measurements on other charts, I do it all the time on this channel. I'll take like a measure from this side and measure up, so on and so forth. So weirdly, even though this hasn't really gone up very far, it's also not come down very far, and it's still made that second bump on, or that the second bump, because I'm 1, 2 on this side. So look, this is why this matters, because this is where it changed direction here. And then you can see like this is where the RSI is breaking direction here. And so when we go back and we look at this in a simpler way, you can see that move. That's basically done. And then this move here. How bizarre, huh? The symmetry is kind of uncanny. Once you notice it, it's hard to see it at first. I don't really know how to mark it though. I guess I'll use the moving average, the yellow, like that guy. Because the purple that you see on my chart is like the actual RSI, but it's hard to mark it on the 4-hour. It doesn't look as obviously like succinct. We're kind of back to where we were before. See, that's bizarre though, because then how do you use... That can't be the middle, but it is the middle. The lowest RSI is still right here on this earnings report though. Maybe I'm working on the wrong two markers. Maybe I should be looking at this guy here. We've already established that's one of the head and shoulder heads. That's the high, that's the low. So it hits a high, reverses, and then when it comes back up, I can't tell. Does it go higher? I hate when the price is like super janky, because it's really difficult to tell where I think it went higher here on that push, which makes sense because that was the breakdown when it hooked beneath the trend here. It's trying to re-advance and it can't. It lost that uptrend here, and then it just pitters out and dies, goes to the side, drops it, right? We see that visually in the price action. So this was kind of like the last hoorah. So I think we identified it correctly. This would be like the last point of interest right here on the upward side. No, this is the bottom. This is the break. So I think I used the right markers. It's just a little bit messy. So these kind of intersect further over. They're more on like the 13th, which is another number that keeps coming up quite a bit. Seemed like that was a possible place of advancement where we just didn't advance. And you can see why. We had broken down and then it could have held and like reversed, but it did not. So yeah, so this is the wave here back out to the upside. you can see they came to nearly the same place to try to get it overbought. So this is a big flush that goes all the way from the bottom all the way back to the top. Not quite as big as this flush, or excuse me, not quite as big as this flush. This one did not go that far, but it is a decent one. So it's kind of the reversal action. Keep in mind, like, this seems dumb because it seems like I'm just playing like a kid's game where I'm trying to like figure out where the left leg has to mirror or something. But you got to remember, like, in theory, this is 4-hour time frame. This is a much bigger wave. So in theory, like, this is still part of a larger structure, right? So I'll draw it on the chart. It's not a game. Like, it's not, I'm not doing it for no reason. The reason that it looks so symmetrical is because it's part of another wave top, right? And we're trying to see if there's another advancement in this wave top before it comes crashing down again. And I think there is, because this established like a head and shoulder pattern on the big picture. And it's pretty long-winded. Like, it took a long time from the bottom to the top. So it's not a matter of like, oh, you're just trying to make it look just like the other side. It has to look. No, it doesn't have to. But the length of the waves matters, right? Like, we could probably find a way to divide this into sections to some degree, right? And develop like a system with the sine wave. Maybe we'll just use the sine wave thing for once. I never use it. We're still sitting under 460. It's been in the same 5-cent region since I got on. So if you guys are like, what's going on? Not much. GME's had more action. It bounced off 25, head back up to 26. So it's less of a loss on the day. This is the wave. It's pretty good, actually. It looks pretty good. Because then this actually makes a lot of sense. This would have been the up wave here, down, up. Yeah, down. It works. Major down right here, and then back up. Major down, and then back up. So on and so forth. I'm kind of splitting them in two, but whatever. Like back here I am. This looks like a 1, 2, 1, 2, 1, 2, 1, 2, but I want to use this because this is what I want to focus on. This isn't really part of it. So we think that the middle is right there around the 20th. We're beyond the point of debating that now. It could be different, but that's what we're going to use. And then we think the top would have to be back here. So I'm going to get rid of some of this other stuff real quick so I can see. Interestingly, the RSI peaked, like the moving average on the 4-hour RSI actually peaked back here before the move. It peaked before the big run up. But if I'm just going to define the ups and downs, I'd have to say that this is the up and then this is the down, which is simple enough, right? It's gone up and then it's gone back down and then it's going up again. So much like what we experienced back here, we may actually not see the moving average on this. Yeah, good old battle of 460. Yep, that's what this will be called. I was there. I love it, dude. That's fun. Yeah, so it's pretty straightforward. So this could actually end up being the highest. I mean, it's very possible this could be the highest that the RSI goes on the moving average. The actual RSI did come higher on the big run up. A lot of it's probably not that high because of the fact that it only took like 2 days. I don't think the moving average had time to catch up before the price was already coming back down. So like the RSI is disjointed here from the price action for that reason. So it could be something very similar. If you get a big run up here, either to 560 or to 869 or to 13, that RSI may not ever come that high, like the moving average might not. So if I were venturing a guess here, and I don't love the idea that everything has to be perfectly symmetrical, but I think we could make an assumption to some degree that this wave, Look at that. Right at earnings. This wave completed right at earnings. Yes, it did. So they had somehow, I don't know how they could have possibly have measured it out that way, but they did. Ooh, man. So this is the low point here of this wave from the center. And then this actually is not the low point. It's slightly off. But it's pretty darn close to the middle of the structure, you know? Maybe that's just because they didn't know. I mean, maybe they didn't know it was going to be like exactly that date. I don't remember what it was estimated at originally. I think it was maybe estimated to be, yeah, maybe it was estimated the week of the 8th because that's elections. Maybe they were just looking at elections then. So this times out to be basically like 50-50 from the low here on the bounce to the election time. Pretty darn close. It's not perfect, but it is very close. More accurately would be to say that this was like right there, but oh. Oh, wait a second. Maybe it's not supposed to be the bottom. Maybe it's supposed to be the top. Because like this would be like the crossover and then the rebound here. Oh, I see. Yeah, maybe it's not supposed to be the bottom at all. Maybe the estimation is like a whip around of the top. So like if you take this point right here around June 3rd, and then you take the peak on the 23rd, that actually works out, ooh, really clean. Yeah. So it's the distance between the bottom to the top. It's like an S-curve instead of, like, so the bottom of this wave, up, down, up. Wavelength would be 1, 2. I don't think that's how you measure wavelength. 1, yeah, 1 up, down, 2. That actually measures out mathematically better anyways. So never mind. I didn't do anything wrong. I think that's correct. I think it actually measures that way. It's supposed to be there. So that would indicate that you're going to hit a high RSI right around here, and we did. Unfortunately, it didn't go very far, did it? Kind of just like pittered out. It's really both, because they're so close together. Make up your mind, dude. I don't know. They're so close together that I can't really tell. And it also depends on if you use the, I don't know, the bottom or the top line. That actually fixes the chart though. See, now look, this is right where it should be, in the middle. So yeah, this is a 50-50 swing around from this point to this point. That's the wave motion that's being engaged here. I get it. So now what? Oh man. Well, now what is that we've kind of spent hours and hours and hours doing something that's kind of leading in circles, which isn't fun. I think there's a dangerous implication in that this should then flush really hard, because if that's the case, I'm not going to say it's like completely inverted, but that's basically the way that it would look to us. Because like this would be, the indication here would be that you would basically be doing that in order to invert it and go down hard to get to the bottom. It's a rotational symmetry, not a mirroring symmetry. So it would imply that you're going to go low. That being said, both could be true at the same time. So there's an important element to that we'd have to note, which is that, yeah, there's a rotation here. That's implied, though. I think we already kind of generally knew that that might occur. If you go to this motion, it can't be one and the same. Obviously, you can't run up and down into the same date. But if the desire is to kind of flush the stock out, this happened in a way that was like really quick. So there's a lot of different things that occur here. Shoot. And it looks like a rotation here as well. So the implication would be that this goes up. It's exactly what we were worried about. And then it chops down. It doesn't even have to be that high, because if it happens sooner than later, it could be like really quick. It could happen like this week. You could pump it way up here. Everybody think it's running to the moon. The reason that makes sense is because when we came down, look at the motion here on this side. Oops. See that motion right here to come down? That push through, it's like a sign of weakness, right? So it's showing like we're going to try to advance lower, perhaps. The reversal of that would be to push up in a rotationary motion, push up high. So if you're going around a pivot point, and that pivot is here, this might explain why we had so many markings. Yeah, there's a strong potential here, because if you can go around that pivot where everything kind of changed direction right here, you hit that mark at 570. It's just right in that pocket. So there's a dangerous zone. There's a danger zone here for sure at 570. And then if it hooks again, it's over. That's what I would read out of that, because what that would be an attempt to drive the price up one more time above this marker and fail. It's almost too good to be true, because it's like really simple. And I know you guys are like, well, it's not fun, Booksy. It sucks. I know. But then you would drive the price really far down going into December. This is a very different scenario than anything we've talked about. So I'm kind of glad that we found it, because while I've been squawking a lot about going to 8s or 13s, we have not really talked about this marker here failing. I think I mentioned it once in the Discord, because somebody had said they didn't think it would go over 480 again, and I said, well, it would make more sense to fail up here than to fail at 480. Now I'm starting to find more reason to believe that might be true. So there's a pivot here that I'm very curious about. I think that might be a problem for us. Yep, I think it might be an issue. So we could hit like 585 or something, you know, it doesn't really matter what it is. You'd hit like 580 or something, and then you would drop and then hook, and then it would be like a nasty, nasty slide. This would probably fall more into line with the concept of that some people were talking about of like, well, if he dilutes again, yeah. So if it pumps up here and then comes back down, this is like perfect rotational symmetry on the chart. Like it works really, really well. And it's not pleasant, no one's saying that, but it's definitely there. as a possibility. Kind of implies you drop low by November 22nd. Are we going to have like a massive flush this week? That's so soon. It's too soon. That's a little more similar to what happened in 2020 though, because it started going down by the 20th. So it's not that off actually. I take it back, because if you look at the measurement on this red guy, look at where it ends. We're confirming what we were doing earlier, because we were saying like this measurement should end at this particular time. Now we're looking at it as a reversal on RSI. Instead of a mirror, it's like a whip around. So the idea is that you're not going up. It's not that it couldn't be both, because like you can have an up and a down, and you could still get that cat ear. That's the funny thing about all this, looking at it from what we did today and from a helicopter point of view. This yellow trend coming down from the top is actually that second wave. It's like that's the outer wave right there. See that? So then it's like, it seems a little awkward, because you're like, well, then it's just going to die, right? Not quite, because what you're doing is you're offsetting the motion potentially. So this doesn't have to be like instantaneous drop to get like a nasty sell down started on RSI. We'll have to see what happens when we get there. If this doesn't hold support and continue and it hooks beneath here, it's done. Like it's going to be dead in the water. It won't go again right now, because there's too much at stake right here to ignore. Yeah, if that drops, comes back below, it's like 485, and then it fails to go again over the 545, something like that, then you're going to have a problem. Dang, and they did it, didn't they? They established that right there. It's right through the center. It's threading right through the middle from this peak over here on the 28th. That's totally what we're doing. We're like fanning around it. Circular pivots are not my favorite. I don't use them very much. There are tools that you can use for circles, but they're annoying. Dang. So it's both. It's both symmetrical in that it's building out a base for like this one over here. So you have this like base built out that rises and then pushes up, and you got a base built out, rises, and then maybe pushes up. It's also rotational in that you're basically only going up to a place where we've previously been a support. We're now going in facing it as resistance. So you do get a pump here that looks like a symmetry, but then it immediately drops. So it's not quite accurate to say this just goes down. It really would have to go somewhat to some degree. If it does this, it would be like an upward pump here. This would hit like a high to sell off, and then it would drop really quickly. This could happen as early as this week. It could be tomorrow. Because this week is, yeah, maybe it ends above. And then the whole next week from Monday the 18th on through the Monday the 25th, if it's just sideways, if that happens, you're dead, and then you just drop for a week. And then it goes down really hard. I don't think the rotation needs to go way beyond that at that point. But you notice that like that red line we drew earlier, that's the mirror line anyways for this. It basically goes right through the rotation anyways. So interestingly enough, that's already there on the chart. It's already positioned itself right on that pivot. This ends up being like the super critical zone right here. for everything. And then if that ends up not, it makes perfect sense why that had to be broken right here. You didn't have to do all that crazy stuff to find it. But then when you look at the downside move, if he were to drop the ball, let's say he comes up here and at $5.40, he says, now we're gonna sell shares in the market, or going to do offering shares in the market, right? Then you've created a base around, you've created a base right here around 450, 460. You push down, that ends up being a little bit of a zigzag here. And then you drop hard going into December, which is very similar to what happened in 2020. It gives you the distribution because technically it's like pushing up like this ear over here in the same manner. And then the weirdest part about it is it's almost symmetrical still, even though it's a rotation. So it's both symmetrical and a rotational. It's pretty genius. In a mad kind of frustrating way, right? So this takes you back to the bottom here, and then you just have time. I mean, if the goal is to not go that low, it may very well be that we don't need to go up to like, and I've already talked about this, like it made sense to me to go to the 8s. But if you didn't need to go that low, that high to come low, maybe the goal here isn't to drive the price down to like 2 again, which is actually a positive for some folks because they'd be like, well, that's good. I don't want to go back there. It may just be to come back to the floor at 295. So in theory, it just depends on what happens here. I mean, it could be the beginning of a lot of things. It definitely could be that this continues to sell down for a while, but I think you'd have a bounce and then maybe drop one more time, and maybe you just hit that gap and January. It's sort of weird because the triangulation, as far as I can tell, does not really favor that. The sign of weakness does. This doesn't. This is the last resistance. This is the last support. So this kind of makes this think this is the stronger move, the stronger trend. But there's another one here that's really, really low, like way down here. I wonder if it's kind of like these parallels though. Maybe we get there when we get there kind of thing. Mechanically, that works well. Look at that. Yeesh. That's also right in the pocket. So that's like the trend down. This is established back here in June. Probably the more important sign of weakness right there, because it does come lower after that push up. 2 bottoms and then it drops below. That actually looks really close to where we're aiming anyways. $312. It's not that different. It's not that different from the idea of what I said, 469. So the good news is also bad news here. There's good news and bad news. So the good news is that the low didn't really change. The bad news is that the high may change, because depending on how you navigate through this, it's not that big of a difference. One just more choppy, one is more of a massive pump and then flush. But they both kind of end up at the same spot between 315 and the gap. It's right where you need to be to get a gap fill going into January. Because then what you would do no matter what, is you would establish, there'd be some kind of an established trend here. And then what you would do is you'd use that established trend and you'd build out a floor above the gap. And then you basically hit the gap and jump the creek. And potentially from there you could just run up. You could have like a massive run. There is a second problem, which is that you now have to deal with a new creek here. But my guess is that establishes like a middle. This is really ugly. It's not really much of a spring motion in this case. It's more of like an LPS on the big picture. This maybe establishes like a middle. And it ends up being the same spots because nothing changes here. Back to 960s again. That's not really high enough to go anywhere important. At this point, I probably look at this gigantic thing as like an LPS though. Last point of support where it's not going to go down again. So there's some good and some bad in that. Y'all are like, I don't see the good. Well, there was never a one-size-fits-all like perfect way to get from A to B, but we've talked about this one enough at this point. Yeah, there it is. I mean, I knew it was going to be there. I just know the timing of this well enough at this point. That's where it is. That's the big creek. So the goal might not be to break it in January. That would be a very different setup. My guess is at this point in the whole scheme of things, if we come back and we do a P&F from beginning to the end, that you probably see that there's a much greater run potential here. So I'm going to just throw it out there that maybe this goes up like in a double manner. This is kind of different than the previous setup we talked about. But maybe it's like that. And then that keeps it from going too far, too fast. Yeah, it rides these parallels up. So it's like a halfway point. $28 is pretty low. It's way lower than I would have expected. Dang it. But it is a triangulation of importance. I've been talking about 80 for years now, so you guys don't need me to explain that, but this is actually really fast, but it doesn't go as far. It only comes up to this top here at like $30. I'm not a big fan of that. I think it's kind of a weak move. I'm not sure it makes sense in the grand scheme of things either. I don't have it on my chart, but I'll try to get the main trend line. This guy. Infinite possibilities, but what's probable is usually what makes the most sense. So we already know that this is where I'm specifically putting it back at the tops from 2017, not the tops from 2018. There's a lot of reasons for that, but part of the reason I want to do that is because this is the place that we had that reverse split. It's the same pocket that you'd go to right here. So it's awkward. I don't like it as much, I'll be honest. I'd much rather, I know it sounds bad because it sounds like it doesn't, I don't want it to go as high or something, but it genuinely could be that there's no desire to ever take it back up higher except for the gap. You guys know about that. And that bothers me. So instead of setting up above it, it's setting up below it. So you see how 2021 we set up above it? This one will be like setting up below it. And it pushes out and it's just weak. I really hope that's not what happens. Weirdly, could still end up being right long term, because if that is what happens, this could be like a massive like cup and handle kind of thing. Or if you don't get that gap fill, it could be going down into like a handle along the top here. This is pretty different than what we would expect. It's interesting though because it's the same, it's like a different path to the same potential end, because it still ends like late 2025, which is a lot more like the other charts that I had here. It's just different. It has like an extra move in it. It doesn't feel as good to me because you guys are like, I don't care. I know. If you play leaps or if you play shares only, you probably don't give a hoot. If you're somebody that likes to swing, this isn't, it's kind of designed to throw off, I guess, the overall like timing of a massive run up. How did that happen? Who knows? So there's all kinds of weird problems with it I don't want to get into right now. I'd have to go through and look at each of these levels and see if it makes sense. Like this one, I'm not sure about. It seemed like if you came up high here, this is what I'd be most concerned about, I suppose. What I'm about to say is like this would be like a longer distributive action than expected. Like this could come way back down to like 12 or something over time for like a summer run up. So there's just a lot of big, like kind of bleeding moves there. And it's like a 1, 2, 3, 4, 5. Which is classic momentum, which is fine. But 4 would be a wave that would not be fun. Yeah, as long as 3 is the biggest, it doesn't really matter. So if 3 goes from $2 to $30, that's probably the biggest move we've ever had on AMC. It's close to the very first, I mean, it's really close to the very first move we had. So it'd be about the same as the first move we had on AMC, but it'd be broken into like 2 parts. or not. You guys are like, what? Or they just don't run and they wait till like March. They wait till the next quarter. They could just pin it down here and trade sideways from January all the way through March. Why not? If you're just going to do the run up in that way, then sure, you could just like stay down here, trade low, and then run up at the end. I'm making some assumptions about RSI down here, but it's very possible this just doesn't even move. If they don't feel like there's a need to check that creek at all, then you could just have it chill out. Build a range and trade the bottom finally. They did not trade the bottom in any real way, meaningful way. So you kind of like feint a move here, and it only goes to like 480, and then it comes back down and creates like a big double bottom. Doesn't break the creek, the bigger creek here, maybe from this top to this peak. There's a lot, man. A lot of options here if you're an operator. Yeah, that would work. And you could do this, and then you could just screw everybody over who thinks it's going to run in January. And then bring it back down, and you get to trade the floor finally. So you skip this liquidity zone right here. This is starting to look more like that 2020 build out now. Except you run in spring instead of summer. Why not? There's no rule that says you have to come up here. It's just there. I mean, it's a possibility. Well, what a day. Okay, so here's what we've learned today. Aside from Booksy's a maniac who can find a million different ways to chart the same things. I don't particularly have any fondness for this particular setup, but it's just there as a possibility. I think that the ideas that I presented today are pretty realistic. They're not blown way out of proportion. This looks crazy, but I bet by that point in time we'd have like an adequate reason for that move. Like we'd have a really good cause built up in terms of like distance traveled with shares. And then if you look at the grand scheme of things, it almost makes too much sense as well because of the jumps here. I've said this before though, right? Like I've said this before for different setups, like, oh, this works out really perfectly. I'll say it once, I'll say it again. I don't believe that there's a definite, predetermined move that the market's going to make. I think there's a likely setup that works and there's a likely setup that doesn't work. And all the setups we've looked at on these macro timeframes that work really well, they all do the same things. They jump creeks at the appropriate time. They trade the full range. And so if you ask somebody like, how do you trade a range? Well, usually it's up to the top, down to the bottom, back to the middle, right? Like, because you're trying to get all different pockets of the range. But it really depends on how you enter the range. It depends on the news that cycles that are going on. There's just so many different ways. You could look at any different chart and you could find a range, and you could probably find half a dozen or more quickly examples of like, here's different ways you could accomplish the exact same thing. That's why when you look at like schematics for like reaccumulation, for example, there's like 8 or 9 schematics that you could find for reaccumulation. They all accomplish what's important, which is you're going to make the right jumps at the appropriate time. You're going to satisfy the range. You're going to get all the shares that you need to get. This is like another setup. This is really like an LPS setup, which isn't one that I've talked about very much. We've done charts for all of the spring setups. And I do think personally that a spring setup is more likely going to have a big pump to the upside to like at least 8, maybe 13. I think there's a good, or maybe I should say there's a better chance to some degree, although this makes me wonder here, that you don't necessarily get a super spring or something if you do this. Nothing crazy, right? If you don't come up as high now. So this is just another setup that we really haven't talked about very much, which is the setup that doesn't have a spring right away or something obvious where it's going to pump really high and then go low. Instead, it stays pretty low, rejects here around 560s, and then takes longer to go down. So they would do like secondary distribution actions back here, right? Probably around 410 because that's the bottom of the range as we see it. So like you would have a longer winded journey essentially down to the floor as opposed to a really violent move to the upside where there's a huge amount of selling and then a violent move to the downside and then you basically just chill out for a minute and then go, right? So the path to getting to that low liquidity isn't necessarily the most important thing. Like the most important thing is, does it make sense in the grand scheme of things to do it this way or this way? And the answer is yeah. Like the reason Wyckoff has two basic fundamental accumulation models is because there's two basic fundamental accumulation. You either go to the low or you don't, and it has to do with liquidity. But in both cases, you're going to have operators who are trying to bring the price up in order to drive the price down. You can do that in a number of ways at different times. And a phase B is the worst possible time to predict timing because it can go on for years. Look at Tesla. It had some of the longest phase B markups ever. Like it went sideways for years before it finally marked up. And then it marks up like huge, right? But the point being is that like we could anticipate as much as we can possibility. But what I really care about, and I think what hopefully you guys care about, is the nature of what happens here. Like, all right, now we know there's a really clear and evident, maybe you already knew this. You guys, well, that's just the top of the range. I know. But now there's a secondary piece of evidence here in that the build out has a rotation going on with RSI, which I didn't really see. So if you look at that rotation on its RSI, it kind of gives you the appearance that maybe this is more likely now. Probability's increased. It just has. And I wish it hadn't, but it has. Probability seems greater now that that's a possibility. Because you're already at this place where, yeah, you've pushed up high, you're coming back to hold support. If it holds support, it should run, but you're kind of like a stone's throw away from, in terms of potential, you're a stone's throw away from where you need to be in order to potentially get what you need. So if it does fail, this is a very likely place that it fails, right? It doesn't actually make the SOS. It distributes below probably this 545. Been there, done that, right? But earlier, I don't think I would have made that as a strong of a case for other reasons. I would have just said, oh, it's a hook. You know, a hook's right there. That makes sense. Now looking at this whole picture, I'm like, sure, I could see why. You take it right above 5 and distribute in that like 50-cent pocket, sell off. That's kind of a reset too, back to the beginning of this. And then you could drive the price low from there. And the changes that would come from that would be like a more long-winded, maybe a more long-winded build out. And I know a lot of people would probably expect January to be a big run up. It could. I just have it like coming down again, but I'm just thinking out in my head like they still haven't traded this low area. That's what I was saying about 2020. In 2020, they'd already gotten down to that low pocket. They were trading that lower half. We're just not doing it. We're trading almost exclusively between $4 and $5. And it's like we haven't barely touched 3 to 4. So part of me wonders if maybe we sell down pretty quick and we spend more time there. But part of me definitely wonders if they do a second distribution. I don't know. It'd be weird, right? And then we don't actually move anywhere till like Q2 or whatever. Excuse me. March of next year, right? It's like maybe, you know, I could see why that might happen if it failed. And talk about frustration. People who are stuck in these plays looking for like ways out would not be happy. So certainly would be a possibility. So I'm going to add this to like, not a huge list. We've got like maybe 3 big ones that we think are likely. This one feels succinct. It feels tight to me. I think it's a good one. And if I'm an operator, this is another way to accomplish something. Same end, different means. But I think you could get to the same point here before taking off. So today we were really hoping to push over 460. Said yesterday I really wanted to see that advancement. I kind of jacked up my chart to make this chart, but the point in all that was to kind of give myself an idea of what's possible and just kind of reset the wave idea. Like, where does that wave actually need to stop? Where does it need to go if it continues? So on and so forth. There's certainly some higher marks, but at this point we've only got 3 really strongly viable wave options, and that's it. You know, one is 570, one's at the 860s, and the other is way up at like 13, which seems far less likely to me than some of the others right now. Based on what I think the long-term goals are, I don't think they need to do that. So it doesn't make sense to spend that kind of money and not really need to do it that way. You know what I mean? Like, you're not going to spend that much unless you need to. And I don't think they necessarily need to. So anyways, today we wanted to get over 460. We did not get over 460. We did, however, hold 450, and we held high 450s. So I haven't really looked at the short term since this morning. We'll go back and look at it. I've been eyeballing the price all day, and yeah, we just kind of bonked our heads repeatedly on the same points all day today. It looks good from a helicopter standpoint. It looks like it's closing high. Some folks are going to look at this and say it's maybe a UTAD because it came up and it's just kind of pushing up, failing. But I'm seeing a lot of volume. Like, there's a lot of volume pickup in this bottom right here and in this bottom right here. I'm seeing a lot of volume pushing. I'm not seeing that volume continue in the tops. Like, there's high volume on this sell down. This was the first big one today when it went up high. And then it basically made higher lows the whole way. So it looks a lot like a rising triangle maybe. I don't know. Wedges in our case tend to be like cat ears. They tend to be a bit synonymous with that. So it can be a difficult one. But rising triangles where you kind of continuously approach the same mark, that's a little different. I think AMC's had a better history with those than with the wedge, although maybe this could be a little bit of both. Since we're including after hours right now, you might include both. And it looks like that would terminate no matter what on Wednesday. So no matter what happens, you'd come to some kind of conclusion on that move by Wednesday here, sometime before then or at that point. I think the fact that it made higher lows is good. I don't particularly love this as set up as a possible head and shoulder. It kind of makes me nervous. 1, 2, and then 3. Again, RSI kind of gives you a different picture maybe of what that might be. So I just don't want it to stop. I want to see continuation. So pretty straightforward, right? Continuation here is the 50-50, and that gets you up to 489, which is above the previous high here. It looks like it's pushing over that outermost, I don't know if I want to call it a creek. I think it's just a rotation point now, a pivot point. But on my other chart, there was another one right there as well. So I think that that's a good place for us to be if we want to get up there. And yeah, and these build outs, they tend to go that way all the way. So the next build out would be a 50-50 around that, which again gets you to that first zone where we're kind of worried we might stop. I hate to say it, but it kind of gets you right to that that 560 something button. It's right on that mark. Yeah, so we'll see. We'll get there. So I don't really see a real problem if the TA shows a run up to 580. Just set a stop loss, take your profits, buy back after it drops. Yeah, you're right. That's the down low kind of it, you know? Like the simple understanding will be if it can get up here, you're in a good place. You know, momentum's on your side, but you have to then see that continuation. If it doesn't continue, then you get out. The nature of the drop is what I think is most concerning, because we probably would end up seeing something fairly dramatic, depending on, you know, if it does or doesn't go. If it doesn't go, I think you could see a pretty nasty sell down that really takes a lot of people by surprise. So yeah, we could be spilling out through December, which is kind of the opposite, you know. I think I had talked about hitting a peak late November going into December, but this is a bit early. If it only gets to there, I think it's a bit early. And then there's not that much time before, presumably, a wave might sell down. We'll get to that when we get to it. I don't want to go any further than that right now. We did it all day today, so. The measurements just work really well. I think getting you back up to 565, 570, that's probably the first step. And then, yeah, I genuinely think that could happen by next week. But I think that point forward, things get kind of precarious. If you don't make that push up to like the sixes, you're not where you need to be. And there's a potential there to sell back down and come all the way back to, I think it's going to be a big flush. I've got this going down like slow, but anyways, I think it would end up being like a massive flush down really quick. It might even get the gap, to be honest. We'll get there. Part of me thinks this is like some kind of dilution path. Like he does an offering up at 550. They prop it up, and then he does like an offering. I don't know. I feel like it has to be something like that. Man, it's ugly. Yeah. It's just such a simple, it's like too easy, you know, to like do that, something like that. So it makes me wonder. I fiddle a lot with charts, you know, that's like my thing, but there's a lot of consistency that needs to be monitored. And anything that seems like highly consistent, meaning it works with everything, feels like an algorithmic kind of component to it. Like it feels like it's got the markings of, yeah. So this is pretty good. And this leads you to like December, January, sell down. So it's just like a really piddly cat ear. That's what it looks like. And then it goes into like a distribution mode. Works itself back out. Anyways, I hope that doesn't happen. I hope we get eights. I do think it's possible. I mean, it makes sense to me because I'm looking at like this downward trend meets us there. This upward trend meets us there. So like they're both reasonable, you know. If you were looking at this from a helicopter standpoint and you're like, well, I think it's going to go up here because of this trend, I could be like, well, there's this trend. They're both reasonable, and they're probably, you know, fib levels or whatever wise, they're probably right where they need to be to make a good argument, which is why we don't have like we don't have the answer. I'm still not particularly bearish this week. So somebody was asking if I'm bearish. I'm not bearish this week. I think we're going to go big up one more time. But what I'm concerned about now is like, after doing what we did today, I think you could accomplish what you need to accomplish by even going lower. And the argument that I made yesterday when someone was saying like, well, why don't we go higher? Why would we do this? Why not go really high? It's like, you don't do what you don't need to do, you know? So like the more we fight against the idea that you're not in control, the more, you know, you start divulging into situations that don't make any sense. So like if you continually say like, well, I think it's going to go higher just because, you just start getting into these situations that don't make any sense. And an operator who's somebody who's got millions and millions and millions of dollars, like they don't care what makes sense to you. They don't care what makes you the most money. There are going to be times where that falls into line with what they're doing and you're going to make money with an operator for sure. You just are. Because big institutions run the market. It is what it is. It sucks. It's not fun. We also talk about other things like short interest and stuff. They're the ones that are kind of bringing those shorts in predominantly, you know? So like there's certainly a model here of possibility in these higher targets, but I don't think that it always makes the most sense. I had made an argument that they were going to take it up here originally to 13s because I thought they were going to sell it really, really low and they wanted to come back down. The longer this goes on, the more I'm like not really convinced they want to do that. They may take a more mild, mellow approach and just kind of keep people somewhat interested and continually have these like little fake run-ups and just chew it up. And I don't think they need to worry because they bought in before the $3 push. So for me, it's like Vanguard has skin in the game, but they've got probably a really low price average. You know, they had sold most of their shares off and then probably were buying back in the way down. I don't think they're worried at all, you know. So I'd have to go look at the 13Fs again, but maybe things have changed. So I still expect there to be a bull run before a drop. Unless we lose it here, unless we drop back below here and like start generating a hook down, I don't think this is bad. It doesn't look bad to me. It did the creek check. It's trying to break out to the next level. It just needs to hold and get above 460, and then we should get some takeoff. And I still think it's going to bleed up all the way to the top near the 570s. So regardless if it goes beyond that, that's the main move here that I'm trying to track right now. GME had a nice bounce today off that 525 area. It's looking a lot like what I drew, but I really feel like that bounce is going to be met with some follow through, maybe some chop for a minute and then some follow through going into next week. I don't really expect there to be another massive push up just yet. This is a more theoretical push, talking about December. GME is a different beast in a lot of ways, but this is not a guarantee for me. So if anything beyond 30 is like bonus stuff for me. I think there's another $8 range above 30 for GME that we might hit, and that would all be bonus. Right now, I'm really only expecting to hit that 29s. And frankly, like the chart doesn't demand anything else. There's, again, people are going to have disagreements, but based on like the structure here, it's really just coming back up to check this marker down to this marker. And I don't think this one's necessarily going to be at play, way up at 47. So maybe I'm wrong. We'll get that second one. Yeah, maybe. Maybe Roaring Kitty tweets and just bleeds up again. Who knows? $570s is the big one for me. I don't feel like it's that different either. I mean, I've talked about this before. It's like the same spot. It's not that different. So it's just another way of looking at the same information. Yeah, this is going to be one heck of a winter. I don't know, man. If it were up to me, I would just run it to 13. I just hope you guys know that. There's a difference, a big difference between like what I want to have happen and what may actually happen. So I hope you guys know that I'm not ever in a position where I'm like happy that it may not run. That's not me. So I think that WTO is at 38 cents. Yeah, it's still stuck in the mud. It needs to get back above. It just came back down and checked the floor, so that's good. This is the daily. Yeah, it looks like a good back test. If it holds here, it should just advance. It's exactly where it needs to be. I don't know. I will tell you honestly that earlier, if you had talked to me beginning of the day today, I would have said 869 is the most likely, and I would have said 13 is less likely, and 570 is less likely. Knowing what I know about AMC sometimes, I want to hold off on making that declaration, but I feel like that 570 just makes me really nervous. They have a way of pinning it when they want to pin it. We've seen this time and time again. Like, the targets are there, but then you don't get there. You get like halfway and then you distribute. And it really just depends, I think, on where the sellers pick up momentum. Yeah. I don't know. I'll revisit it tomorrow when I've had some time to sit on it and I can think more clearly about it. I want to look at EMAs. So I want to say the EMA, that the daily EMA had come down pretty low. It's like right here now at 6. So again, a rejection off the daily would just mean that you're not going higher. That's the 180 EMA on the daily. It's like right at 6 now. It's been brought really low. So there's all kinds of weird little things like that that I didn't look at, you know? And if the goal is just to go down and get lower liquidity, like go down and get low again, then you don't need to go that far. You just don't. It's pretty easy to do. Just a pump and dump. I'm curious though, we've been outside of this trend for the whole week so far. You know, it's going to look pretty strong. Some of these candles might, if we finish really high up. So that could bring in more buyers. Yeah. If he's going to do it again, it would make sense to do it near that top. Maybe he doesn't dilute. Maybe that's the difference between whether we get the run up higher or not. And you never know. I mean, an operator may have that as a factor, a variable that they're fairly certain of. They always have some information maybe that we don't, but like, you never know. I don't know. I don't think you know either. We all have a strong feeling about what might cause something like that to sell off. We all know that's a possibility. We're all looking at the cash flow saying, is he's going to do it again? But that's still just us making guesses, educated guesses, but they're still guesses. We just don't know. So it's, in my mind, like I always think about a track, remember, you ever built like one of those train tracks? You guys are like, well, I know what a train is. Well, a train has a switch on a track, which allows it to switch one direction to another. And I always think about that because that clicks in my brain really well, because it's not like you're turning around. It's just like you're going a particular direction and then it diverts. And it's not like you could have known. You're heading north. Okay, well then the switch turns. It's like, well, it's such a subtle thing, but you may not be heading true north anymore. You may be doing something else where you could start turning around or whatever. I mean, you can do the same thing with a car, but I like the idea of a switch because it's very binary, like left or right kind of thing. It sort of makes it imply that it's very possible to flip the switch last second. And I don't think a quantum computer with a bajillion-dollar brain or whatever that thing has, I don't think it matters to that computer at all. Like they have they're just programmed to make money. And so they're taking that data into consideration. And I think it's just a switch. I genuinely do. I don't believe in this idea that it's always like this perfectly predetermined thing. I think what we're seeing when we do charting well is we're seeing possible outcomes. And it's stupid, but it's a bit like that guy from the Marvel thing, Doctor Strange, right? Who looks into the future and he sees like a bazillion outcomes. And he's like, oh, but there's only one outcome where we win. And it's like, okay. But I genuinely think that's kind of what the quantum computer programs that run BlackRock and Vanguard, that's kind of what they're doing. They've got multiple funds that have different goals. All those funds have different goals. They're constantly interacting with hundreds of stocks across the market within each fund with its own separate goals. And then it's got to put those goals against each other at times and decide how it's going to accomplish. I mean, you think about the massive amount of power that has to go into that. Ultimately, it is binary. It's it making money or is it not? It's a yes or no question. But it happens over the course of time, which means it's considering all of this as a mathematical formula of like time, distance, right? Like how do we get from A to B? And that's where things get crazy because supply and demand can change, things can happen. I know it's all theoretical, you may not care about that, but TA is trying to answer the question that is very difficult to answer. You don't have to do it to play the market, but the only other thing you got here is you got fundamentals. And as far as I can tell, fundamentals haven't changed that much on AMC except for the debt being pushed out. They've been better over the course of the last few years, but that hasn't prevented the stock from turning around. So it seems to me like this is more like steering a ship, maybe, or not a train. You're turning around very slowly against a current that wants you to go one way. You're trying to turn around and work against the current. It takes a minute. I used to work on a boat a while ago, and they were 100-ton COI. That's the classification for size. They're actually like 600-ton ships. But they're classified in groups, so it's not a huge freighter, but it was a big ship. And when you turn it around on a current, there's a lot that goes into that. There's a lot of power that needs to be put into the engine to turn it around on that current. The currents are strong on the river. And I got to do that. I had to dock the ship. And I learned how to do that because I was a I was a bosun for a little while, and I was like a first mate, which is like a 3-bar basically on the boat. And so you have to learn in case the captain goes out. But one thing that was always interesting to me is if the current is strong enough, and it usually was, we were docking against the current, which means that you had to have juice going forward. And you would give it quite a bit, and you would still be sitting still. You know, when the current's going 7 or 8 or 9 knots, which is how it would go during the tidal changes, you'd have to be giving it quite a bit just to not move backwards. If you cut the engine off, you're just going to go. And these are big boats, right? I mean, you guys know, you played in a bathtub when you were growing up or whatever. You know? And so it's like, I think about that kind of stuff and I'm like, yeah, fundamentals to me feel like they've been turning around for 3 years, but the momentum, the current has still been going down. So there's this moment that'll eventually come where you'll get that alleviate. You'll finally like overcome the current. You'll go the right way, but it's not been pleasant. And I think that Adam Aaron and that crew are trying to steer this big ship against, turn it around in a headwind, if you will, and a current that's going against them. So I find that to be another good analogy, because I don't think with fundamentals there's any real reason why this would just suddenly run up. I think you'd have to have some kind of that longer term change happen, and it's happening. And then you look at the technicals combined with the fundamentals, and we haven't even jumped over the main downtrends. So it's like there's no real argument that it should just bleed up. There'd have to be some kind of strange catalyst. And in the meantime, you've got an operator who's got billions of dollars that can put millions of dollars into 30 million, shares, and then they can just do what they want to trade low while it's turning around. And then when the time's right, they'll take it up. So that's certainly a way to look at the market if you don't want to trade swing-like, if you don't believe that that's a viable way to do it. I've always kind of done a little bit of both, but yeah, I'm a bit optimistic. I'm a bit disappointed maybe with today's price action. I was kind of hoping it'd be a breakout of 460. So may have to wait it out and see if there's anything else coming. Otherwise, I don't know, man. If we can't get over 460 tomorrow, I'm not sure about this, because it's got to make that move. Otherwise, this is just another head fake. So we'll see. All right, I'm out. I'll see you guys tomorrow. I may be on early tomorrow. I just wasn't today for other reasons, but I may be on early tomorrow. So we'll catch you guys later. I hope you have a good day and be well.